I apologize, I can't share my screen. Karen, can you share the presentation?
Welcome to Zoom. Please press 1 to join the meeting. You are in the meeting now.
I'm glad I'm not the only one that has that happen to.
Great, thank you, Karen. I appreciate it. Well, members of the committee, my name is Don Richards. I am the Budget and Fiscal Administrator for LSO. This morning you heard from the Pew Charitable Trust, Angela O, as well as several members of NCSL. This relates to interim topic number 3 regarding structural revenue declines. And I would note that this topic for the Joint Appropriations Committee was selected prior to the advent of widespread COVID and certainly any material fiscal impacts on the state of Wyoming from COVID. Prior to jumping in, I will address a couple of items related to current Craig anticipated revenues. All members of the legislature and the public will be receiving a July revenue update at the end of July, probably the last full week of July. I will say that we are running ahead for fiscal year 2020 of our expectations and forecasts released in May of 2020. I'm unwilling to say that it will require additional upward adjustments at the October Craig. We will still continue to monitor that. But for example, sales and use tax are roughly $16 million ahead of our estimates. Our capital gains from our pooled income, that's the state agency pool, entirely invested in fixed income, not equities, beat the overall expectations by $31 million. So there was a large sale. We believe it occurred in June. That is the last month that the State Treasurer's Office has yet to post in terms of their portfolio update. But that was a nice upward surprise. We're also running ahead in terms of oil revenues. Although on this, I'm not sure whether or not our timing is wrong or the magnitude of the downturn is wrong. Coal and natural gas are very close to our May 2020 estimates. Other revenues are running modestly ahead. We expect to end the year approximately $18 million ahead of our current estimates. And other revenues such as state royalties might be modestly higher, maybe a couple of $1 million higher. Coal is declining, as I indicated, as expected. If you look back 1 year, we were producing a little over 4 million tons per week. We are now producing as a state 3.5 million tons. So that reduction of 25% is right in line with the Craig estimate. There's only one oil rig operating and no natural gas rigs operating in the state as of last Friday. That is down from 32 rigs operating a year ago. Our sales and use tax is off 11% roughly in March statewide, 15% in April, 12% in May. That is somewhat better than we anticipated and potentially due to the discussion yesterday that Representative Schwartz raised in terms of the increased liquidity that is being provided into the pockets and paychecks of Wyoming citizens and travelers. I would also conclude my first introduction with a statement that overall our estimate of $1.5 billion, so roughly $1.1 billion on the general fund side, $400 million on the school foundation side, is a total revenue reduction from Craig May 2020. If you recall, the state profile indicates a $877 million shortfall of the general fund. That accounts for all of the excesses, the carryover balances, all of the other potential adjustments that might be used for support of that budget gap. I will indicate and stress that we prepared the May estimate with little or no actual background or data trends. We had one data point. Therefore, undoubtedly, we will have to revise in October, and hopefully that is a revision upward. But it is too early to say. At the current time, the trends are in line with our expectations, with some notable differences, oil being the significant one-time capital gains. There are also areas where we have been overly optimistic. Those two areas are on the equity side, the PMTF and Common School Permanent Land Fund, neither of them hit the 5% spending policy, neither of them hit the Craig estimate. So we fell short on both of those. Fortunately, in terms of the general operations of government and K-12, our miss on those doesn't matter because the guarantee from the spending policy accounts comes into play. What it does mean is that there will be less money available in those reserve accounts for future years. Not materially so, but in the low tens of millions of dollars. With that, Karen, if you would.
Yeah, before we do, Don, just one comment on the oil. You're probably aware of it, Mr. Co-Chair. Sorry for just jumping in like that, but what happened with June is the differential was as low as it's been in maybe 16 months, or it was $3 only for June. You know, May was like $16, and I think July it's gone back up again. So we had a 1 month hiatus from a really big differential. That might be something you can keep an eye on. Thank you, Mr. Co-Chair.
Thank you. Yeah, that's interesting.
Mr. Chairman, what I'll cover in this presentation is the major sources of revenue for the state, the volatility, some appropriation trends, savings, rainy day funds or reserve accounts, and then my last slide of material importance is the cash flow analysis. Next slide, please. The major revenue sources I know all of you know, so this slide is more for posterity and for other legislators. But the major revenue sources in Wyoming are sales and use tax, property taxes, particularly for K-12, investment income, mineral taxes from the 3 large minerals. And throughout this presentation, I use hash bars in the lines and bar graphics to reflect projections and solid colors to reflect actuals. The measure of volatility that I use is a standard deviation of the annual percentage change in collections. There are multiple other measures. For example, in the stock market, you often refer or hear the term beta, or the difference from the overall market regarding one individual stock's movement. You also can, some states use a coefficient of variation in their volatility analysis. I'll explain that a little bit further on the next slide. This slide is a summary of the estimated volatility, and importantly, recall that during the Pew presentation, they said the average of all states' total revenue was roughly 5%. It probably ranges on the order of 3 to 7%. We worked fairly closely with the state of Minnesota, which has an extraordinarily low volatility in their revenue system, low single digits, maybe 3 or 4%. You can see at the bottom of the second column, Wyoming's total volatility measure for the major revenue sources is approximately 13%. And one way of looking at that is if you double that number, double the standard deviation, that means 95% of all years. So 19 out of every 20 years or so, the annual percentage change will be no more than twice the volatility measure. So take investment income, double that, and you get 64%. So in 95% of the cases, you won't have volatility more than plus or minus 64%. And in fact, we will see toward the end of this presentation that has happened, because obviously with investment income, you not only can have a change compared to the prior year, but you can actually have negative income. through the experience of negative realized earnings. So investment income is arguably one of the most volatile revenue sources. In the far right column, what I have included at the chair's recommendation is what the contribution of this particular revenue source was to the May change in the outlook for Craig. So sales and use tax and oil, you can see oil by far was the largest change that Craig made in May of 2020. Sales and use tax was the second largest. Natural gas and coal, we've made more modest adjustments to. Still sizable, but rather modest. We did not modify the non-mineral assessed valuation at all. That's your residential and commercial property taxes. And the other would include such things as state royalties, liquor taxes, state cigarette taxes, that sort of thing. So you can see some of the most volatile, particularly oil, also experienced the largest change in our revenue expectations. Now, these changes are over the 27-month period from March 2020 through June 30th of 2022. And if you drop down and notice that 1.8 billion, that will be a new number. You haven't seen that before. And the reason being is in the note. That 1.8 billion also includes the impact to the Permanent Mineral Trust Fund, meaning we are automatically saving 1.5% of the severance tax. So about $350 million of that 1.8 billion is attributable to lower amounts of savings. If you take that away from the 1.8 billion, you get to the 1.5 billion, which you are more accustomed to hearing about. Next slide, please.
Mr. Chairman.
Yeah, go ahead.
Don, a question on that. So when you, on your graph, you say estimated long-term volatility measures. Is that a measure over the entire period? Was that a 20-year period? Or is that an annual based on 20 years worth of data? So I'm trying to understand the derivation of that number.
Excellent point. By and large, it is over a 40-year period, and it's the percent change year over year, and then it's the standard deviation of that percent change year over year. So we look back to roughly 1980. In a couple of sources, we were able to go back to 1970. And then we looked at the annual change. And as you can see, natural gas is very high because even in the course of 1 year, it might be as high as $5 per MCF and as low as $1.50 per MCF. And the average might be $3, and the next year it might be $2, which generates a significant amount of volatility year over year. So this is the average year over year over 40 years.
Mr. Chairman, a follow-up then, Don, I'm assuming within that 40 years, there was the range was significant, a broad range within that. Was there any way to look at that and say, here's the range that we dealt with the last 40 years? I know we probably, this last year is probably the largest range we've had as far as swings year over year, but how did that look?
You're exactly right. So generally speaking, the 1990s were at, state revenues were at a low level, but at a very stable low level. And then from 2000 to 2008, we had significant year over year and almost always in the positive direction, growth. You might have 20%, 30% growth year over year of particular revenue streams. And then since 2008, it has been choppy to slightly down. And of course, going forward, we don't include any of the estimates from beyond FY20. So our projections for 21, 22, 23 are not included in this analysis. So we really have not captured any of the COVID relations. Now in the Pew information, I believe they use a 20-year period. And so they only looked essentially from the beginning of the century to today. Yeah. And they came up with 13.6%. So it was very, very similar to our analysis. I'll point out a few other items that they do differently than we do, but they're pretty technical points.
Don, would you explain that footnote again? I'm not sure I understand it.
Sure. So at the bottom right-hand side, where it has the total contribution to the decline, it has one $1,843,000,000. Well, everything that you've heard from me in the last couple of months suggests that that real number is 1.5 billion, not 1.85 billion. And the reason being is we normally do not include the revenue anticipated to be deposited into the permanent mineral trust fund. So that 1.5% constitutional amount that is going to the permanent mineral trust fund is the $352 million additional decline. So not only will there be $1.5 billion less available for the legislature and the governor to spend, there's also going to be, in our estimate, best forecast, $350 million less saved in the permanent mineral trust fund.
And that's just because of the declining revenues.
Because entirely due to severance tax declines, yes.
Yeah. I see. Okay.
Karen? I should also add, we added approximately 6 additional slides from this original presentation based on a conversation with Chairman Nicholas last week. I did not change the slide numbering scheme, hopefully to avoid confusion. But where we have added new slides, you can see at the bottom right hand of this, we have labeled them with a letter. So this is slide 3B. It will not appear in the first iteration of my presentation. It does apply in this second iteration. This is essentially 40 years plus our forecast of the contribution of revenues by major sources. Now, it doesn't include every single revenue, but it is the vast majority of revenues that the state deals with. And you can see the bottom yellow portion. I'm going to walk through each of these and at least provide a quick comment. Bottom yellow portion is the state sales tax. One of the most notable things here is between 93 and 94. And that is the change from the 3% sales tax to the 4% statewide sales tax. So you see a little bit of a bump there, but generally speaking, we have an upward trend roughly equal to inflation and some volatility due to the underlying extractive industries. The second blue section relates to investment income. This is the PMTF investment income as well as pooled investment income, and you start to see really dramatic changes. So you see I see 3 pronounced peaks around 2008, 2015, and 2019. And you also see a couple of troughs. If you look back pre-2000, it's very steady, and that's because it's entirely based on interest. The state didn't invest in equities, and it had, as a result, much lower volatility. The next section is oil, and you can also see the significant increase and decreases. You see the 2008 peak when oil was selling for $145 per barrel WTI. The next section is green, natural gas, and you can see extraordinary growth from 2001 through 2008. That can be explained by coal bed methane in Campbell County and elsewhere. That's the discovery and exploration and development of the Jonah field, as well as the Pinedale anticline. And you can also see the magnitude or the size of that green is dropped off dramatically. In fact, it's as bad or equal to the decline overall in coal in terms of natural gas. Coal is actually in the reddish pink section immediately above natural gas. Again, you can see a steady decline up until about 2010, 2012, and then modest reduction with a couple of years of a sizable reduction. The darker green column is what I would describe a work in process. So the prior 3 shaded areas, oil, gas, and coal, incorporate severance taxes and ad valorem taxes. It's our intent to include FMRs by mineral going forward as well. Unfortunately, with the federal data, that is a long-term, maybe a year, 18-month project to disaggregate the federal mineral royalties in the federal data by mineral. It's quite a lengthy project. I skipped over, because it is so small, a very light gray, maybe a light blue color between coal and FMRs, and that is representative of the modest contribution that Trona has to the overall state finances. Next, we have the white group, which was fantastic when it was available, but you can see it no longer is, and that's coal lease bonuses. So you can see for about 15 years, we had and relied sizably on coal lease bonus payments. I believe at last check, $2.8 billion of coal lease bonus money was used just for the support of K-12 capital construction alone. Then we have the non-mineral ad valorem. That's your commercial, industrial, and residential agriculture property taxes. And that is probably our most stable source. I think in the last 40 years, it's only gone down 2 or 3 times. Pretty extraordinary stability in the valuation of those properties. And then finally, other revenue.
Okay, question?
Sure.
Thank you, Mr. Chair. So Don, I'm looking, it looks like 2009 maybe in the non-mineral ad valorem, there was a huge increase. What was that attributable to?
I think I'll have to look into that. I think it's a little bit deceiving potentially because of the other revenue components below that in the graphic, but let me check real quick. Yeah, it appears when I look at the raw data to be pretty modest increase consistent with prior years, but I will check and see if that's the underlying components that are leading up to it that maybe make that look like a larger increase than it is.
Yeah, that makes sense. Thanks, Don.
Karen?
Good.
I'm sorry, were there questions? So I'll run.
Mr. Chairman?
Yeah, go ahead. I can't see everybody on my, I gotta scroll down.
Yeah, Mr. Chairman, this is Representative Summers and Don. I just thought it was interesting, and I guess I should, realize this by now, that FMR, the total FMR piece really is the same as severance and ad valorem together. Is that about right? Are they about the equivalent? It looks equivalent on that graph.
Mr. Chairman, Representative Summers, they're actually about 1/3, 1/3, 1/3. And to put that in perspective, the severance tax rate is about 6%, give or take. Half of the 12.5% FMRs is about 6%. And then on ad valorem taxes, the statewide average mill levy is approximately 63 mills, which is also 6%. So when you add up the light green, the red, and the black, that should be about twice the size of the FMR green.
Okay, so Don, just to follow up, that sure doesn't look like it. It looks like when you have black, if you take the far right edge and you look at black, green, and red, it looks to be about the same width as that dark green.
And it won't be exactly 1/3, but I think a lot of this, again, is unfortunately due to the stacked nature. If you want me to break this out, say ad valorem, property, and FMR individually, happy to do that as well. And maybe rather than by mineral, we can do it by source. It's a pretty easy graphic to make.
And Mr. Chairman, just, Don, the reason I bring it up is, during the COVID thing, we've had the threat of FMRs going away, and we could have FMRs going away some other way. So it does stress the importance of FMRs in our revenue source, though, I think.
Absolutely.
Thank you.
I'll run through the next series of slides relatively quickly. They're the same for each revenue source, but you can kind of get a sense of the history. And again, you can see between 93 and 94, a big jump because it 30% higher sales and use tax when it was raised from 3% to 4%. Then you see the steady growth from the mid 90s to 2008. And it has been irregular since 2008. And also you can see the next couple of years in our forecast, we see some precipitous declines. Even in fiscal 1, which is what we're currently into fiscal year 2021, you can see we're not that much lower than what where we had anticipated, or where we actually were in fiscal year 2016, which was a pretty significant downturn in the commodities. So we're seeing a year much more like that than the prior 2 or 3. We also, this is an example where candidly I cheat. Pew would not do this, but in order to get the measure of volatility of 11%, I just throw out the change of the tax rate between 93 and 94. They would have incorporated that and rebased everything. So that's an example of how we do things differently. Next slide, please. The assessed valuation, 2 issues here. The mineral total is in dark blue, and the agriculture, residential, commercial, industrial is in light blue. And that light blue is much more stable, and the dark blue is much more volatile. And it's illustrated both visually as well as with the volatility measures, where you have mineral volatility of 23% year over year, and non-mineral volatility of 4%. So a much more stable base when you're talking about the more fixed properties. The second thing here is, this is another great example. I think if Pew were doing this slide, they would not title it assessed valuations. They would title it ad valorem taxes. And this one probably took 10 or 15 minutes to create. And if you do it their way, it would probably take me 10 days of doing nothing else to create, because they would take into account every change by every tax district from 1970 to 2020 in terms of their mill levy. So they go through all of the school districts that imposed a bond, or a community college that imposed a bond, and they would identify it on the ad valorem tax as opposed to the assessed valuation. But when you look at the underlying value, regardless of what the tax rate is, you can get to the same percentage volatility and ignore all of the changes in tax rates over 40 years. And it is an enormous savings of time. Technically, it's, if I were giving this to them or over at Laramie, they would say, well, this wouldn't meet academic muster, is an example. Okay, next slide. Investment income. You can see the very strong stability from 1970 until 1980, when we really didn't have any cash balance to speak of, and the Permanent Mineral Trust Fund was just beginning. Then 1980 through 2000, modest increases, but again, relative stability. When we started investing in equities, and also changes in interest rates, you can see much more volatility from 2000 on per Senator Hicks's prior question. The general fund portion of the pooled income volatility is pretty enormous. The PMTF is also, above 38%. Even when you add two big highly volatile revenue streams together, you get the benefit of averaging them, meaning stocks are not going to work or perform the same as bonds. So the average of those two, 38.45, is actually a lower volatility number. I also threw out 70 through 77 because there essentially was no corpus to speak of to invest. Next slide, please. And investment income arguably is Wyoming's most volatile revenue source. But you also have, you and your predecessors over the past 20 years have also identified a pretty extraordinarily successful way of handling that volatility. The averaged realized capital gains over the last 12 years or so has been about 40%, 48% of the total investment earnings, and investment in dividends comprise about 52%. So when you're looking at that, it's about half from investment in dividends, half from capital gains. Over this period of time compared to the 5-year corpus, you're actually, the state of Wyoming is generating about 6.3% return on the average 5-year market value of the PMTF and Common School Permanent Land Fund. So we beat the policy, spending policy of 5%. You can see that 5% spending policy as a red line. And you can also see the green illustrates interest and dividends, where the blue is capital gains or losses. And you can see in fiscal year 2019, where we had sizable net losses, modest losses in FY16. This is the graphic that I use when I say, oh, 2 out of every 10 years, maybe 3 out of every 10 years, you will have actual negative capital gains, if history is a guide. And maybe a year or two more out of every decade, you will fall just short of that red line. So if we put in fiscal year 20, which is not on the graphic because we don't have the data yet, that number is going to be just shy of the red line, meaning we did not hit the 5% spending policy on investments. My larger point here is the legislature identified its most volatile revenue source and created a sub-policy to address those peaks and valleys. And that red line really smooths out all of the peaks as well as the occasional valleys. Now, I'm not commenting on whether the spending policy should be 4.75 or 5% or 5.25. That's going to change over time based upon policymaker preferences. But what you've done in the past, as illustrated by this graphic, has worked relatively well. Next slide, please. This is the combined mineral taxes and payments, FMR volatility, COLI's bonus volatility, and severance tax volatility. Much more variation than sales tax, for example, but not quite as much variation when compared to investment income. This is also a great case study in when something goes away, and that COLI's bonus volatility, because you're dealing with such small amounts and they grew so rapidly, so quickly, and then they went down to zero, you end up with a volatility measurement that really is not applicable. I say, it's, over 2,500%. And the reason for that is the massive variation percent change year over year. More importantly, when co-chairman Bebout chaired JAC for the first time around 2012, 2013, a talking point of my presentations in that period was that the red checkered portion of the bar was going to go away. And sure enough, in 2017 was the last year we enjoyed as a state any material COLI's bonus payments, and illustrates how a revenue source can in fact go to zero. Next slide, please. The next 3 slides break out oil, natural gas, and coal. The left-hand side is the year-over-year change in oil or gas or coal production, and then the assessed value. Of course, the assessed valuation includes both price as well as production, but you can see the oil trend through the 90s was down. So all of those negative green bars are illustrated by lower and lower blue bars on the right-hand side. And then more recently, beginning in 2010 or so, we've enjoyed a resurgence, maybe a renaissance of sorts, in oil production in the state of Wyoming. Next slide, please. Similarly, for natural gas, we had a huge run-up So all of those green bars throughout the early 2000s are significantly positive year-over-year growth. That's coal bed methane, Jonah, Pinedale Anticline, as well as other basins in the state. And ever since 2008, all of the year-over-year change in natural gas, with one minor exception in 2017, was year-over-year declines in natural gas. So we see the big run up, and then now, unfortunately, we're on the downslope of that natural gas curve. Next slide, please. Coal production, very steady increases, much smaller than the previous discussions in oil and gas, but very steady increases from 1970 to 1980, relatively flat until 2000, and then nice increases to about 2012, followed by substantial year-over-year declines, more often than not. Next slide, please. So just to recap, natural gas is the most volatile, technically. Investment income second, followed by oil, coal, sales and use taxes, and the most stable form of taxation is the taxation of property. Next slide, please. Now we're in a next section, and we'll shift from just revenue sources to a bit more of a discussion on appropriations. And Wyoming's traditional revenue increased by 300% in a decade, growing from over $500 million, $500 million, excuse me, dollars right at the turn of the century to 2.2 billion per year at our peak in FY 2008. That was immediately before the Great Recession, and also the year where we had extraordinary energy prices throughout the summer. Similarly, K-12 increased by about 350%, and these are biennial numbers that nearly match the annual numbers of traditional state revenue in the first bullet. Since then, since 2008, the year-over-year general fund has been on a downward slope, and since 2008, we have on average been 17% lower than its peak. And if you'll recall back to the Pew presentation, where she jumped through those states and how well they responded to or recovered from the Great Recession, and then she ended up pretty close to modern day, and Wyoming was still down 15%. And sure enough, actually, I think it was colored orange to be greater than 15%. And that's consistent with our numbers. We're at a lower level. We've never achieved the 2018 all-time high peak, and are averaging 17% below that level. Next slide, please.
Mr. Chair.
Go ahead.
Yeah, thank you, Mr. Chair. So Don, I'm looking at my paper version of this that was in our packet, and what you've got in red, you know where I'm headed.
Yep.
You've changed the numbers. What led to the changes in the numbers?
Well, two items. I think the first item is Chairman Nicholas wanted to know the specifics between the particular years, and my initial draft did not have the numbers for FY 99 and FY 2008. So I added those, and then I changed the verbiage. I think I had something about, it was 400% higher or something like that. And of course, 500 million times 4 is 2.2 billion, but technically that's only 300% higher because you don't count the base amount.
Got it. Thank you.
Next slide. Thank you. Slide 13 is the budget reserve account, and I've included other accounts by different names from prior years. The LRI, Legislative Royalty Impact Assistance Account, it operated in the 1990s, very similar to what the BRA is today. I also included the OPSTA account, or the 1% severance tax account, because it seems like it has been treated similar to the budget reserve account. We've collected revenues and then expended them from that. And then the underlying green bar is the general fund. So you can see a general upward trajectory, pretty dramatic increases at the beginning decade of this century, flat to declining over the next 10 years. And then you can see, unfortunately, our significant step downward for fiscal year 20. And then fiscal year 21 through 24, unfortunately, we do not show a recovery to our pre-COVID levels. A couple of reasons for that, some of which have probably nothing to do with COVID, but you'll recall several of the long-term structural revenue trends have been exacerbated by COVID. We don't anticipate, Craig does not currently anticipate a renaissance or a resurgence in coal production, for example. And it's taken such a significant drop in this past year. Year over year, we're not anticipating a resurgence to pre-COVID levels for that commodity. In the case of natural gas, the same is true. Anticipate some growth toward the end of the forecast period. Maybe not to the current FY20 levels of production, but close to that. Next slide. This is the same slide, but it's done on a biennial basis as opposed to a fiscal year basis, and provides the similar information for the school foundation program and the school capital construction revenue. Again, that big hump between 2005 to 2016 is apparent in both graphics, and then a fairly significant drop off in the estimates, although not quite as large.
You know, Mr. Co-Chair, a quick question. Don, you know, you don't need to do this now. Maybe Matt would do that, Matt Wilmart, but it'd be interesting to see the K through 12 students like in 99, 2000 and relative to the increase. That'd be something that, I don't know, you know, and then also the number of state employees in that time frame to see, just to get a sense of what's going on. Thank you.
Absolutely, Mr. Chairman. I think this graphic is one that a member of the Senate has raised and mentioned in yesterday's testimony. We're at a tipping point here where the total K-12 state and local appropriations are going to match this year, and then we anticipate they will soon exceed all of other traditional government spending. That's Department of Health, UW, community colleges, general government, Department of Family Services, and the like. So those two lines, you can see the state benefited more dramatically from the run up in natural gas in the 2000s. And you can see that from the blue line, where the increase in K-12 was a bit more modest. Then you can see post 2008, the general fund has been stable to slightly declining, and is particularly declining after 2016. And throughout the period, with 1 year exception, and I think it's 2018, in the red line is actually a year-over-year decrease in K-12 budgets. But other than that single year, you have relatively steady upward increases in K-12 compared to the blue line, which has more recently been on a downturn. Next slide, please. And this one, for those of you on the recalibration committee, the next two slides were provided to, they're the same that you saw a week or two ago at your meeting there. But what is interesting, and I call this the double whammy slide, when revenues decline, it is the greatest need for the state to step in and support the loss of local resources, specifically local property taxes, to support K-12. So the red line, which is the local share, more often than not has exceeded the green line, which is the state share. In 2018, it was flipped, and then flipped back in 2020. And unfortunately, through the current Craig forecast, we are anticipating that the local share will be less than the state share, which puts the state school foundation program under more pressure at the worst time, because the expenditures to make up for the guarantee are going to increase at the same time that revenues are declining for the school foundation program.
Mr. Chairman,
Go ahead.
Don, a question on that, because primarily the local share is composed of property taxes. And based on their previous projections, you showed it was the least volatile of all of them, about a 4% volatility rate. And I know one of the other graphs showed that there's a small reduction, but based on that, it looks to me like the order of the magnitude, and this doesn't jive with the volatility. So any explanation with that? Because that's been the one steadiest source that we have.
Yes, if you could take us to slide 5, Karen. Thank you, Karen. You're exactly right. The non-mineral assessed valuation or property taxes is only 4%, but it's the mineral portion. And more acutely, you can see the dark blue line, which is the mineral portion, and 2020, the far side of the estimate. You can see we're projecting almost, it's not quite, but almost a 50%, maybe a 40% reduction in mineral valuations between 2018 and 2020. That's calendar year in the case of property taxes. So it's not so much and if you take that far right-hand line of the blue, it's roughly equivalent to slide 16 is where we were, Karen. Yes, that decline in the red dotted line is almost entirely due to that 40-ish% drop off in mineral taxation.
Mr. Chairman.
Go ahead.
Mr. Chairman, thank you. This is Representative Summers. Don, you know, on that other slide, and I just give me a hint on this. You know, if you take that's based upon, I'm sure that the projections are based upon that middle of the road scenario. So when you go to that other slide, you could see that the mineral valuation was really low. You know, if we were to look at our most optimistic, you know, your most optimistic look at, you know, your scenario, it wouldn't be appreciably more, right? I mean, we're talking just a little bit, 10%, 20%.
I think it would be appreciably more. I believe I did an analysis for you that indicated the difference in the out years of our base case scenario and the high case scenario was $1 billion off of a $2 billion decline, which was about 50%. So round numbers, if you take that red dotted line, it's going to, you could maybe earn back half of that. And it's, what I will say is we are on the optimistic side of the base estimate. I'm unwilling today to say we're on the optimistic estimate, if that makes sense.
Mr. Chairman, no, and my point isn't that it's going to be a lot better, but it's still extremely bad. That was my point, I guess I was trying to make. It's not as bad maybe as I was even thinking of, but it's still not good. Thank you.
Next slide, please. This one also, as I indicated, the prior slide and this slide were provided to the recalibration committee, but I think they're useful because this JAC does not spend much time on K-12. And how is the money spent? Or in the model, what are the larger areas of expenditure? And you can see that bottom blue area is teachers. And then you have personnel, but non-teachers, so administrative support staff. District personnel is, the administration is the clear box. Non-personnel, that's more supplies and reimbursement. That is the green checkered portion. And then the red brick portion at the top are the direct reimbursements for special education, transportation, and there are a few others. What is interesting, while it is increasing year over year, and with the exception of 2018, it actually did go down for 1 year. The teacher's salaries in total, that's meaning all compensation from teacher or to teachers, is relatively flat between 2015 and 2020. That's the bottom blue line. It doesn't mean that total K-12 is not spending more, but it's coming in areas potentially other than just classroom compensation.
Mr. Chairman.
Go ahead.
So Don, as I was looking at this and studying, I see our reimbursements increase. And so my question on the reimbursements is the breakout. What percentage of that overall reimbursement is special education? Because we see constant increases on that that to me seems sizable. Are the other reimbursements like transportation of a similar pattern, or is most of that growth coming from where?
Mr. Chairman, perhaps Matt Wilmarth might text me or email me during the presentation if he's listening. If he's not, no big deal. But I believe my recollection is transportation is about 1/3 of that. Special ed is about 2/3 of that. And then the miscellaneous is, a few percent. And that's also why when we do long-term forecasts, this doesn't have any forecast on this particular slide, but we note our assumptions at the bottom of the page and we say 4% increase in reimbursables because that component is increasing year over year, almost regardless of ADM and anything else. That those transportation and special ed costs are just a pretty steady increase, and that's why we break it out in our forecasts.
Thank you.
Mr. Chairman.
Go ahead.
Mr. Chairman, thank you. So Don, as I think about in my mind, the three big drivers of increases in education costs are, special ed, ADM, as your ADM increases. And so we can't really see ADM in here. We just see the result of ADM and then health insurance. So Don, my question back to you is, I would assume that the health insurance is built into this teacher piece, or is that in the non-teacher hash piece? So, and if it is in the teacher piece, then does that mean their wages are actually going down while health insurance is increasing, or in fact, districts are just keeping that health insurance the same by utilizing different plans? Any ideas there?
Mr. Chairman, I believe that the bottom three, so the white, blue checkered, and blue, all reflect personnel costs. And I believe it is the total compensation, both their salaries as well as their benefit package, which would include health insurance. And so their total compensation for all personnel is particularly classroom, which is the bottom, has been relatively flat. I don't know the answer to why that is the case, although one fairly big driver is that Matt reinforces with me on a regular basis is the churn of teachers, meaning they retire at a higher rate of salary, and those individuals are replaced with largely newly minted, younger, less expensive teachers. So you actually have a offsetting factor to the normal inflation that one would expect in overall compensation, because you have this turnover of high-paid retirees leaving the system and new, younger teachers coming in at substantially lower cost.
And so, Mr. Chairman, just Don, if you were to, if you would have extended this graph out into projections, I think your newest projections or Matt's newest projections, it's still, we're figuring special ed goes up 4%, ADM goes up 1%, and health insurance is it projected at 10%, which used to be the kind of common projection for health insurance increases?
Mr. Chairman, Representative Summers, you're exactly right, and we would continue to use the 10%.
Thank you.
Yeah, and Don, real quick, Mr. Chairman, is the one of the things that I would look at or ask on this, and I didn't ask it the other day, but the number of teachers, when it looks flat like that, is that the total number of paid for teachers? But you don't know if the number of teachers went down, went up, does that have a factor in this, or am I missing something?
Yeah, and to follow up on that, Don, does teachers include teachers' aides, or is that all just certified teachers?
Mr. Chairman, I believe the blue is just teachers, and the certified aides would probably be in the blue checkered, which are non-teachers, and then district personnel or administration. To Senator Bebout's, Co-Chairman Bebout's point, this does not take into account the number of teachers, so it's quite possible, I don't know this, but we can look into it, that the number of teachers may have been reduced from hypothetically 17,000 or 8,000 teachers to 7,800 or something like that. But the total compensation, meaning the total payout for those remaining teachers, remain the same.
Got it.
If there's no further questions, next slide,
Don,
please.
Don, please, if I may, Mr.
ahead.
Chairman. So going back to the reimbursement, and I really appreciated Representative Summers' comments on the 4% and the 10%. That 4% increase we see in special ed, are we seeing that ADM increase, or do we have an analysis on that, or is it just costs of services that drive most of that?
Mr. Chairman, we do have the analysis on that, but as I recall, it is cost of services.
Thank you.
If there are no further questions, great. Slide 18, there's a lot going on here, so let me pause and explain it a bit. Everything in red reflects education, K-12 education. The blue reflects state expenditure, state government. The line is indicative of revenues, and the bars are indicative of budgets. So what we intended to do, and we'll start at the far left, the total budget for K-12 in the red check is roughly equal to the revenues for that year. It still required some supplemental contributions, and that supplemental contribution comes in a variety of forms. For instance, the LSRA, SIPA fund both supplemented school capital construction. The cash balance and the PLF holding account supported the school foundation program. But nonetheless, they were relatively close. The bar chart and the red line for 17-18 and 19-20. Again, 19-20 is actually an estimate because we know the budgets, we don't have the final revenue amount. So that's a bit of an estimate. As you can see, the blue also compare relatively favorably. The traditional state appropriations without any savings are equal to the state revenues. And we might be slightly over or slightly below in any particular biennium, but we're about on target. Then it's the next two that are of concern. And if you take a look between the line that is blue and the bar, that's your $1 billion, roughly speaking, $1 billion shortfall on the state side. And if you compare the red line against the red bar for 21-22 biennium, that's the roughly 400, give or take, $1 million shortfall on school side. The problem is really in the next biennium. It gets worse if we don't get a sizable recovery, where we still are left with an $800 million to $1 billion shortfall on the general fund side. We're left with double the size of the shortfall on K-12 because you have 2 bad years of property taxes that are incorporated into the K-12 chart. Now, as I will discuss later on, there are a lot of things that are already moving both the line and the chart. So the bar chart, for example, is being reduced based on the governor's testimony yesterday by $250 million. We're also generating modestly more revenue than we had expected. So for example, that blue line is going to be slightly higher. So we're coming together, but we're still a sizable distance from a truly balanced budget, which the goal would be, at least from a policy perspective, to balance the budget and have the line equal the bar. Any questions, or I'll move on? This is a different section where we'll have a few slides about the reserve accounts, rainy day funds, that sort of thing. In slide 19, I try to take out all of the noise that is potentially injected in the legislative process. Creation of new accounts like the SIPA account, or movement of funds from the Buffalo Bill dam account to the general fund, or the children's trust fund to the general fund, or swapping money from the 1% severance tax. All of that kind of stuff kind of melts away when you just look at the total beginning balance of the state agency pool. And you can see extraordinary growth. And this does include the water accounts, the Common School Permanent Land Fund reserve accounts, the Permanent Mineral Trust Fund reserve accounts, as well as the General Fund Budget Reserve and LSRA. So it includes everything. But you can see dramatic increases, steady increases from 2004 all the way up to 2016. Even though our revenues peaked, as you'll recall, in 2008, we still had growing balances. And then that next period of time, between 2016 and 2020, it has been somewhat irregular, but generally lower. So you see that, that's why I added the arrow of the general increase in revenue, followed by a bit of a stagnation, irregular decline. It will be very interesting to see, but we won't see it for another year, the ending balance on June 30th, 2021, to see how much the various reserves have been spent down. Next slide. This gets back to the discussion we had of what I would describe as a very successful policy of the reserve accounts, which serve as a ballast to the investment income. Since 2004, fiscal year 4, both of them have grown fairly steadily and fairly dramatically. The big jump on the red chart for the Common School Permanent Land Fund reserve account is the result of a deposit that the legislature made from the School Foundation Program reserve account to the Common School Permanent Land Fund reserve account. So you see that big jump of almost $159 million between fiscal year 19 and fiscal year 20. We are going to be spending down the Common School Permanent, or the reserve account this year, as well as the PMTF reserve account, but over time, it has served the legislature fairly well. Next slide. A different type of savings as opposed to the reserve account. Here is a growth of the LSRA, and it also shows the beginning balance of the fiscal year over time, as well as on the right-hand side, deposits made, as well as appropriations taken from the LSRA. So a big buildup from 2005 to 2016, and then additions and subtractions. I think Representative Schwartz has pointed this out several times, where you have appropriations from the LSRA, but you also have the automatic sweep going into the LSRA. So 19 and 20 is a great example of that, where you have deposits as well as appropriations. And then 21, 22, that estimate, that's a sizable increase, over $600 million. That's $100 million is solely for locals, 105 to be more precise. And then about 515 million is our best estimate for support of the School Foundation Program reserve account. The question, I think, that going back to the Pew's presentation and the first 10 slides or so of this presentation, is the LSRA essentially the ballast for everything else? Is it the spending policy reserve account for investment income? You know, is the LSRA going to serve as the ballast for property taxes, severance taxes, and the like? It could. I don't know if that was the intent of policymakers, but it certainly started increasing outflows at this time.
Mr. Chairman.
Go ahead.
Mr. Chairman, thank you. Don, on these, in the estimates, the part where you have money going into the LISRA, that's obviously not the LISRA refuel because you don't profile capital gains. So depending on whether we get capital gains or not, we could see more or less in that, correct?
You're exactly right. And I don't mean to belabor this conversation, but there are two big sources of funding for the LSRA. One is a share of any of the investment income over 2.5%. I think you will get a little bit of that this year, but not as much as we anticipated. On the other hand, there is an automatic sweep at the end of the biennium. And you'll recall this was the last action taken by JAC, and it was that number that was kind of put in there. We've talked to SAO about that, and it is a lengthy computation. It will not be completed until September. But we can already do some estimates, and we are dangerously close to either exactly that number, give or take 5 million, or potentially even a deposit, a couple $1 million deposit into the LSRA. It's going to be very, very close. Next slide, if there are no further questions. This was added, and you can see that designated on the bottom right. It's slide 21A, so it wasn't in your first packet. This shows legislative action to build the LSRA. And this is really I won't speak to any particular legislator, but this is a legacy of your colleagues who served in the legislature between 2005, at least through 2015, as they made ad hoc appropriations into the LSRA. And you can see those in the dark blue lines. They made ad hoc appropriations to the corpus of the Permanent Mineral Trust Fund. And if you'll recall back to that spending policy line, it was a steady red line in the upward direction. And the reason why it had such a good pace is because of all of those additional deposits, whether it's from the 1% severance tax, when you were able to do so, or a direct appropriation to the corpus that really built the Permanent Wyoming Mineral Trust Fund over that middle decade, 05 to 15. And then on the far right-hand side, you can see what Representative Summers was talking about in red, which is the spending policy portion of refuel of the LSRA. And then in the hash line, what we anticipate to be appropriations out of the LSRA. Next slide. This one we'll talk about for a little bit, and then I have two more narratives, so I'm almost wrapped up. But this was the slide of significant conversation yesterday following the governor's presentation. This is our preliminary cash flow analysis. And we looked at it month over month. So the beginning June balance in the green bar is a known number. That is just over $300 million in the combined balance of the general fund and budget reserve account. The combined balance today, we anticipated would be over 500 million. We haven't put in the actual number yet for end of June, but it will be about $100 million higher than that for a couple of reasons. It'll be over $600 million of total cash available. Part of that is the actual revenues beat our estimates, but also the state auditor and state treasurer have not made the automatic distributions to the SIPA account and the automatic distributions to the LSRA. So they will come right off the top of that large cash balance. Then, unfortunately, from July through March, we anticipate that the income will be less than the outflows, meaning revenues will be less than expenditures. Maybe a month of August, for example, those two lines are going to be very close, and depending on what our spend is or agency spend is in any particular month, we might actually be very close to the estimated revenue. But more often than not, we are anticipating that expenditures are going to significantly outpace our revenues, and that $600+ million balance that we're starting the fiscal year with is going to slowly diminish. In my mind, you never want the green bar to be less than the red line because expenditures occur throughout a month. They don't all occur at the end of the month. And much of the revenue, much of the blue line actually occurs at the end of the month. So December is the first month of concern where the cash balance is insufficient to cover that month's expenditures. However, this is based upon May 2020 Craig, as noted in the note at the top, without any budget reductions. So the governor, when I created this graphic, had not announced any budget reductions of any specific size. On Monday, he announced $250 million. So we would, if I were to redo this graphic, we would be able to shift the red line on estimated outlays or estimated expenditures downward, because we know now that vacancies won't be filled. There may in fact be some RIFs or furloughs or services that are not going to be provided. And that red line will move down, which would increase the carryover cash balance month over month. In fact, I already have done this, and it pushes it out to about February of any concern. Now, does it mean that the estimated income, that blue line of revenue, could be worse than Craig expects? It could. If we have a major shutdown of the national economy in September or October, that number of estimated revenue might shift lower, in which case it could be a problem this calendar year in terms of cash flow, but my best estimate today is that is unlikely to be the case. Next slide. So I have two narrative wrap-ups, some takeaways. The revenue sources for Wyoming are highly volatile compared to other states as well as individually. Revenues increased dramatically because of the growth in oil and natural gas. Over the last decade, state appropriations have been slightly declining. K-12 budgets have been steady to slightly increasing in most years. Your predecessors and some of you, more senior members, have exercised at least 6 different forms of savings: the constitutional severance tax, constitutional royalties, the statutory 1% when available, the statutory reserve amount in terms of budgeting for the governor, investment spending policies, and then ad hoc tips, Section 300 appropriations directly made to savings. Next slide. And overall, the reserves are modestly declining prior to COVID-19. I would articulate that we did have, the state of Wyoming had a structural revenue expenditure disconnect even before COVID. COVID exacerbated or accelerated that underlying disconnect. May 2020 forecast of Craig indicates substantial declines in both state government and K-12 revenue. Although in italics on this bullet, I say that there are some bright spots where the actual revenues are somewhat more optimistic than our May forecast, which is better than the alternative. And even with those actual results, the expenditure revenue disconnect is growing. It looks to be unsustainable without action. And I would add on to this and perhaps go a little bit off script. When the Pew folks come in, and I think Co-Chairman Nicholas had several comments about, meaning you legislators are doing what they would recommend and doing so informally. And I genuinely believe this, that the occupations and your livelihoods that you as individuals bring to the table inform this policymaking. If you look around the video conference room, you have a lot of people who are involved in agriculture and in mining, the extractive industries, even law. These occupations are not like occupation that I hold, or a lot of different people who commute to work in Denver. You don't rely on a known salary month over month. I have a real good idea about how much I'm going to earn this month and how much will earn next month. Those of you who are in the agriculture or the extractive industries or even the law or tourism, you have peaks and valleys where you will go several months with less income than your expenditures, and you have to plan for that in your household. And I don't mean to preach, but your occupations have served you well for this type of volatility and policy environment. And unfortunately, Wyoming's revenue structure is highly volatile, much more volatile than other states. But I would submit that the legislation or the legislators, as Co-Chairman Nicholas indicated, is almost inherently responsive to that based upon the actions that they've taken collectively.
Questions?
Mr.
Don,
Chairman,
go ahead.
Mr. Chairman, I just wanted to thank Dawn. I really thought, and I shared this document with my wife just to have her look at it. And she commented as well. This is a really good document for the public to get a handle on what we're facing and where we came from. I think it's very readable, and I just really appreciate staff putting this out. I think it's really good. It's at the right time for people to see all of this.
So Don, we talked about last week putting in one more slide. And so if you might just speak to it, and that was the going back to page 5 on the assessed evaluations and the impacts of that drop to cities and counties. Just so that not only the point is that we need to have and maybe even 2 slides, we need to have an understanding of what the overall impacts of these declining revenues are for assessed valuations, maybe even sales and use tax to the counties, and what they can reasonably anticipate in their budgets. And so when they come and tell us about it, we understand it and we know what it is, and can then just put it in part of our package of information that we have as we move forward.
Yes, to that, I can absolutely do the county piece of assessed valuations. Unfortunately, it is statewide, so each county will be treated quite differently, but we can add something to that. I would note counties have not experienced what they will. Cities and towns, as the mayor from Cheyenne testified, they made significant reductions in April of this year because they are heavily reliant on sales and use tax. Counties are heavily reliant on property taxes, much more so than sales and use taxes. And their impact will be much more like school districts in that it will be delayed 18 months. It is coming in a significant way in particular counties, but they will not experience the sudden downturn that municipalities have. The second comment on that, if I might, is the dramatic difference across the state of Wyoming. You have counties and municipalities like Rawlins and Carbon County that are experiencing extraordinary growth. Their sales and use tax is up, I believe, for the last four months. Sales and use tax are up 15%, 47%, 215%, and 50% in Carbon County. They are experiencing a mini boom, if you will, with wind energy. If you
it's long deserved for them though, because they haven't experienced it in the past very much.
If you contrast that, and I can pick a couple of counties, and I won't pick on Sublette, which I have previously, but Converse County, the same 4 months, year over year decline of 15%, decline of 12%, decline of 33%, decline of 58%. They're on a very negative trajectory, which impacts the community of Douglas, of approximately the same size as the community of Rollins, could not be more different in terms of the outlook that they are experiencing. And then even within the state, it is pretty remarkable how some of the smaller agriculture communities, Goshen County, for instance, is continuing to grow 10% year over year. And it's not always clear, why that is happening. I've spoken to some of the legislators up there, and they believe that folks from Colorado are visiting their community retail and as viewed as a safe place to acquire goods and services. I don't know if that's the answer or not, but that's part of the discussions. But you can contrast that with a community like Casper or Cheyenne, which are experiencing fairly sizable year-over-year declines.
Well, and to follow up on that, Don, maybe we ought to just create a section that has 5 or 6 different slides. And on 1 or 2 of those, you can break it down by county and city, just in a with a bar graph. So, and maybe with some projections, with some history included into it, so we understand those overall numbers. But if it's just going to page 5, if you've got $6 billion in revenues, and what's that, 420 million a year, 2/3 to schools, 1/3 to locals. And so it would just be nice to know what that impact is to locals on what they can reasonably anticipate the money they're not going to have. So
I believe we can do that. And unfortunately, I think there'll be a limited number of counties, maybe 5 counties, Converse, Sublette, Campbell, among a couple of others, maybe Natrona, that will experience the lion's share of that reduction.
Yeah. Mm-hmm. Okay, thank you. Other questions? Representative Larson.
Thank you, Mr. Chairman. And I guess my question would go back to the 2 chairmen. Is the information that we received today, we see our revenue down, and we've been cautioned that maybe it's not the best thing to wait until we've spent all of our savings before we say now what. I guess my question is there any, have you guys had any discussion about this committee as we move through this interim, considering ways to generate revenues? I know that we're looking hard at cuts. Do we look at something, because we know we can't do it all in cuts, are we pawning that off on, kicking that can down to somebody else? Or is that something that we should be looking at and trying to, tie the steer off and get it taken care of? I don't think I hope we do. I just makes me anxious.
Well, I can only say that this committee has a tendency to do that, even though we're not the revenue committee. And in part because we have, strong people on this committee, and some of the folks that are the sharpest in the, in the wood shack. And if we do something, we have a better possibility of having success on both floors. So we'll just have to see how that evolves. But I tend to agree with you.
Mr. Chairman?
Yeah, go ahead.
Mr. Chairman, on that note, and I think the chair's tasked staff with this was, at some point we were going to look at fees, right? As we look at these agencies and we look at where the fees have been established and how long they've been wherever, kind of like we did with Ag last year with what's in the Department of Ag. Have we, when do you anticipate we would do that? Would that be during the budget process? Each agency comes in, they talk about their fees as well, or I can't remember how that discussion went.
Go ahead, Don.
Mr. Chairman, Representative Summers, that did come up at your June 9th meeting, and we prepared a letter on behalf of the co-chairs that was sent out to all agencies. I believe the deadline on that is September 30th, which would give us about a week and a half to compile it, and we would send it out in advance of your late October meeting. That's our rough timeline. If I could add one more item unrelated, I believe several members asked about the K-12 graphic regarding personnel costs. The health insurance is in fact included in all of the categories. One statement here is this is the model generated staff, not those actually hired. So that may help explain the flatness of the personnel for the classroom teachers.
Well, and what I'm curious about in that graph, Don, is we've heard over the years that you know 2/3 or 80% of all of education are salaries for teachers, and it's really not. It's closer to 55%. It looks to me like.
We can get the percentages there for you. I think a lot of those reimbursables are special ed teachers as well. So I think the total personnel compensation is about 70 to 80%, but we can get the specific numbers.
Well, and to me, it doesn't make a lot of sense to segregate teachers, assistants, and aides because they really are in the classroom working. They're just not certified, and so to me, that I mean, there's reasons to have both concepts visualized.
And Mr. Chairman, on the same way on transportation, the bulk of the money in transportation is bus drivers. It goes back to personnel there as well.
Okay, further questions for Don? Representative Larson.
I'll resist the temptation. It can be a discussion we can have later, Mr. Chairman. Thanks.
Okay, further discussions. Does anyone got any suggestions or comments on the slideshow? Additions or subtractions, or if we want to do other conclusions to it? Go ahead, Mr. Co-Chair.
Thank you, Mr. Co-Chairman. Just Don and I've been working on these type of slides and projections for years and years, and every time he does one, it's just amazing how well he jumps into it and the results we get from it. We really need this data to make good informed decisions, and well, we got a lot of them coming our way, so this is a valuable tool, and thanks Don and everybody else with your staff that helped put this together. And I think that usually NCSL they brought some good information today, and I was pleasantly surprised to see what they brought that really affected some of the things we're doing, of course, as well as the Pew, which I've looked at and listened to before. So all good in that regard. As to Representative Larson about the JAC becoming the JAC/revenue, we have an agenda list that we were supposed to do. We have days, and we did do some things last session that right there when we were doing things. I don't know if maybe you consider some of these things in November, but I think we're pretty tight on what we're doing until we get to November, to those November meetings. But I think all of us agree that there's no way we can cut our way out of 1.5 billion, but I sure as heck don't want to raise any taxes till we look at responsible reductions, and we're trying to do that. So I guess we just see what happens and let the process work.
Representative Larson.
Thanks, Mr. Chairman, and Chairman Bebout, I completely agree with you. I just don't know that you have to wait until you're on the last square of toilet paper before you go to the store, though. And I don't know why we can't be considering these, knowing with the estimations that we're going to be running short. We can come up with a plan and have the plan ready, and then as the cuts are made, implement those as we go. I just don't want to wait till the last minute and be caught with my pants down.
Well, the only thing I would say, Mr. Co-Chair, is in all this toilet paper, there was a true shortage. I prepared for it long before I even knew there was going to be a shortage.
What's your closet look like? So let's take about a 10-minute break. I'm supposed to start a conference call like 3 minutes ago that I need to go take care of. And then, so let's take a 10-minute break and then we'll come back and wrap up. And Don, if I'm on that special task force with Senator Wassenberger on the community college funding, would you just get a hold of them and see if they could delay it for about an hour?
You bet.
All right, thank you.
And before we leave on that, who's on that committee? I think I was, am I on that committee, Bob?
Yeah, but I think this is just the, Wass and I and staff gearing up to put together what we're gonna do to get prepared for the first meeting.
Thank you.
Are you there, Don?
Yes, I am. We are on YouTube.
Yeah, did you get a hold, I think we set aside 2 hours for that.
Yes, it's just staff and Senator Wasserberger. I indicated the earliest you would be done would be 4:45.
Yeah, so why don't you have staff contact Jeff and see if he can do it tomorrow sometime.
Okay. You want him to suggest a time?
Yeah, I think I've got something else tomorrow. I gotta check there was one other thing that we had to do. Let me look at my calendar real quick. No, I got my days mixed up. It's Thursday. So I can do it tomorrow in the
Okay.
morning or the afternoon.
I'll reach out.
Okay, do we have everybody back? We'll give Don 1 second here. Okay, we've got, Don, 2 matters left, right? We've got the Capcom bill and a potential and how we're going to deal with the a COVID appropriation bill. Anything else?
No, Mr. Chairman, we might speak just generally about when or where you wanted to meet again toward the end of October.
Okay. So, Mr. Co-Chair, just as a, we walked through the Capcom bill yesterday, and now we were going to work it or decide if we want to move it forward. With my discussions with you and the House this morning, the idea that we suggested was that we divide the Capcom bill so we have just a state Capcom bill, and then take your amendments regarding expenditure of COVID dollars for community health facilities and possible tagging in broadband and any other items that we want to discuss here today, or perhaps even a working group might work with that we established today, to formalize that, finalize it, and get it submitted to the members, and then have another Zoom meeting to review and approve that. That's what my suggestion is. So we can work the Capcom bill without it today. We will discuss generally your request that I think it's section 7, and establish a working group that will look at that plus your proposed amendments. My plan right now is to have myself and Representative Summers on that working group with you and whoever else you want, so or whoever else you designate for that Capcom bill. And my other thought was that we could take as a template the broadband bill that the other working group put together, and work with that and add in the section 7, then anything else we want to discuss today as kind of a working draft of that bill. And then that working draft will play with the Attorney General language. any type of recapture or what we need to do at the end of December to make sure that that we don't lose any COVID dollars, or how else we want to handle it. And then bring that back to the body as a whole, and circulate those drafts with the entire body, but have the working group kind of do any wordsmithing to get it into a draft that we can review as a full committee. So that's my plan for the rest of the day, and I just want to get your feedback on that, and if you're good to go with proceeding with that.
Mr. Co-Chair, members of the committee, yes, I am. I think that really kind of gets to what I wanted to try to accomplish, to maximize the utilization of COVID dollars for our state and broadband, come in, and broadband and, rural hospitals. The other thing, Mr. Co-Chair, that I think we need to have a look at and see if the committee has any strong feelings against it, but I think it's a good idea, is, with what I'm hearing about the enrollment being way down for our community colleges, possibly the university, and clearly that's COVID funds related, I think, because of what's going on with our country. I think we ought to have that on the table as well, and anything and everything. So, and I think timing is of the most importance if we're going to talk about a special session for COVID related issues, which in my opinion, I think we should. I'm not sure when that would be, but it might be 3 or 4 weeks out. So we really need to get this all vetted properly. The one thing that I would ask, and how you're thinking about it, is if we were able to do this, this kind of a bill would probably need some public testimony, or at least to have it vetted in the public. So how would you handle that part of it?
Yeah, my thought process, Mr. Co-Chair, was that once we have a final draft, and we'll circulate it amongst the members, and then we'll just reconvene in a Zoom meeting to take public comment and work the bill as a committee of the whole one more time.
Yeah, that works for me, and I'll visit with my senators and get their input, and I'll appoint another one to work with this. And I think that's a good idea. And as we go forward, and there's some great testimony from NCSL, and I've got some more ideas, and and Representative Larson talked about this committee being pretty nimble on our feet and able to come up with good ideas and move things forward. So I think this might be a good opportunity for do that. And I agree with that. And then to work the Capcom bill now, and hopefully we can get something out. And that's let the process work today and get her done.
Yeah, and with regards to the timing of it, I think that everyone, if we add in a COVID response and assistance to community colleges and UW, say for a tuition incentive or something to that regard, that needs to transpire sometime in the next 2 weeks for them to timely notify their students, to have the incentive for them to enroll and to understand what it is and go out and advertise it. And so I think we've got to act, that this committee has to act relatively quickly. So what I envision is sometime next week, probably in the middle of the end of next week, we'll reconvene to kick that out of this committee.
The other thing, Mr. Co-Chair, that's pretty important, and the governor stressed yesterday, and we all agree, is we want to cooperate and work together. And is Kevin still on board? I see he's
Yeah, I
there.
see him there.
Is he here? He's not? Okay.
Yes, sir, I'm here.
Kevin, you're listening to what we're saying. I really would like to somehow be sure we engage the governor's office, or you, or maybe it's Erica, whoever you want us to deal with, to get a consensus between us for sure as we move forward on this and what it entails. I think for us to plow ahead without that input, I don't think that'd be fruitful. So I'd like to have that cooperation and work with you. You okay with that, Mr. Co-Chair?
Absolutely.
Okay.
And that really ties in. I think the governor's already talked about broadband. He's done a few things for the community colleges and UW already, but we know that that's not going to, those funds won't address the impact of having 20 or 30% of students not show up on campus. That's just going to be, that's a double or triple whammy for them. So that sounds good to me. All
And
right.
I will tell you that, you know, even more so now with the state going through these difficult times, in a lot of those communities around the state, and Riverton's one of them, and all of them, even Cheyenne, as large as it is, and Casper, community colleges have a big impact on the local people there. And so, yeah, we've got to be aggressive in this and do all we can. So, yep, let's do it.
Okay, well, that's the plan. Okay, now let's go to the Capcom bill. Don, just bring us up to date on where we're at.
Mr. Chairman, 21 LSO
Just a
0020.
second, let me interrupt one more time. I see Representative Miller is still here. If he wanted to comment on, was he going to comment on the Capcom bill, or was he going to comment on COVID? I'm not sure he's even still here. We ought to afford him that opportunity if it's a COVID related.
Absolutely, anytime he wants to pipe in.
Yeah, thanks, Mr. Chairman and Mr. Co-Chairman. I was just here to listen mostly to see where we're at. It sounds like we're still going to work on that COVID bill. There are some amendments that are needed. So you're going to do that in the next couple of weeks. I missed out part of that conversation.
Yeah, we'll have something out probably within 10 days.
Okay, very good. I'll keep track of things and provide testimony at that time. But there's a number of communities in the state where this COVID money could be used.
Okay, appreciate it.
Thank you.
Okay, go ahead, Don.
Yes, Mr. Chairman, 21 LSO 0020. Anna and I walked through the text of the bill yesterday. We know that there are some members who may want to make amendments, so that would be if you wanted to work the bill. And then section 7 is the section that you noted might be ripe for the COVID bill.
Move the bill.
Okay, bill's been moved by Representative Bebout, seconded by Senator Guru. We have any amendments to the bill? Let's just go to page 1, 2, or 3. I don't see any hands raised. Let's go to page 4. Any amendments? Senator Hicks.
Mike,
Can't hear you, Larry.
There we go.
Thank you.
I'll just go line by line through this section 27. So, Mr. Chairman, I don't know if you want to do these individually or do them collectively. My preference would be to do vote on each one of them individually.
Yeah, that would be my my request.
Okay, Mr. Chairman, I would move that on line 7 SBC contingency that we reduce that from $8 million to $4 million.
Is there a second? I'll second it for discussion. Go ahead, Senator Hicks. What's your thought process?
Yeah, Mr. Chairman, I think, Mr. Chairman, I just think that, you know, given the fiscal, where we're at now and the fact that the governor has B11 authority, the ability to move some money around, that I think that $4 million would cover most of the contingency. We're really only talking for the next 8 months, but that's the rationale.
So comments on the motion. Representative Larson.
Mr. Chairman, I think that this is one of the areas we talked about during session and then post session with the governor, that I thought that we had that everybody was pretty well agreed upon, that the Building Commission needed that contingency, which we had used, and I think perhaps Representative Summers can give us a little more elaboration on that. But I think that we had depleted that significantly, and then we were also providing some funding in there to cover some possible anticipated costs elsewhere.
Yeah, and just to clarify on that, Senator Hicks, 4 of that is already taken. And so the only dollars available out of that really for contingency for the SBC is $4 million. And basically it's dollars that are already spent, so are committed.
Mr. Chairman, so is that for the state facilities construction? I thought
That's
that
correct.
4 million was a separate line item.
Well, there are 2 line items, and what we did is in an executive session, we added those all into one pot just because we didn't want to put a price tag on anything. But that's where the 8 million came from.
All right, Mr. Chairman, now that I understand that 4 million was already moved in there, I would withdraw my motion.
Okay, I appreciate it. Go ahead, Representative Larson.
Mr. Chairman, I think we want to be careful and make sure that Senator Hicks, we're not confusing you, because if you go down to line 23, that $4 million was a known amount that we needed to cover for asbestos abatement. And so it's important that you're not confusing that we moved that up into contingency. It was an additional 4 million that we needed in construction stuff that we were putting along with the contingency that makes up the 8.
Okay, Senator Hicks, you have another motion?
Yeah, Mr. Chairman, I would move that on line 8 that we eliminate the $500,000 for the level 1, level 2. I just think that planning for new buildings right now, given the uncertainty of the 1.5 billion shortfall this budget, and then if we look out to 23, 24, we saw the magnitude of that. We're looking at $2 billion structural deficit. I'm not opposed to looking at strategic buildings, but I think we need to really take a hard look at just on the planning side right now, just to fill up the pipeline for things that may or may not happen.
Mr. Chairman.
Second by Representative or by Chairman Bebout. Discussion. Senator Kinski.
Mr. Chairman, I respect my colleagues, Senator Hicks' concern. I'd say this. When we had that big downturn 08, 09, and the then president put out the famous shovel-ready money, the people at the front of the line were wide-eyed because they had their plans done, even though their projects were not funded. And ever after that, I told the city of Sheridan, you always make sure that the stuff that we're fairly comfortable we're going to do, that you keep it moving along and get the plans done. And we've had, besides that shovel ready, there was one other round of funding out of DC where you had to really be ready to just hit the ground running. They're talking about another round of stimulus. And I get it, to be building things even with federal money after we've laid people off. I get the optics of that, but at the same time, it's jobs for Wyoming people, and I'd like to see them have that stuff, keep it moving along against the contingency or the prospect that Washington may do another round of stimulus, and that you've got to have your plans ready to go in order to put those funds to work in the state. That's my thoughts on it, Mr. Chairman.
Representative Olson.
Yeah, thank you, Mr. Chairman. I respect Senator Hicks's motion. I understand the optics of it. If I understand line 8 correctly, that's SIPA funds. So I would wonder what the senator's plan would be in order to backfill or rather transfer that money to the general fund. While it sounds good, the reality is it's not part of the $1 billion general fund deficit. So I'm wondering how we connect those two if we're not going to spend that money in the SIP account. And I would echo what Senator Kinski says about economic development. I think a lot of these projects, as we go through, we could say that for all of the projects. The reality is that you're going to hire contractors, you're going to spend money in local communities, you're going to build, and you're going to have development. So we could have that, we could obviously have that discussion for every single line item. There's no need to. I'm just more curious how those SIPA funds would solve the general fund deficit.
Well, I can take a shot at that, Mr. Co-Chair. I would rather see SIPA funds allocated to a major maintenance. And it seems to me that if we're going to start planning for buildings where we may not even have enough money to do major maintenance on buildings we have, we ought to just take a deep breath and say, no, let's just hold off for a little bit. Let's see what happens. We got plenty of time to come back and do this later if we decide to go into the planning stage. The other question, quite frankly, is how many buildings or how many other projects are out there ready to go that we've talked about in the past that we haven't got around to getting through. And I know that you don't see on this list, nor would I support at this time all the community colleges, but there's been a lot of work done in that regard as well. So there's a lot of projects out there available to move forward when and if we even get the money to do them. So I think this is a pretty good amendment.
Representative Walters.
Thank you, Mr. Chairman. I think we're getting ahead of ourselves thinking that because we do a level 1 and level 2 study that we're automatically building a new building. Oftentimes these level 1 and level 2 studies are done to evaluate the need for a major maintenance project, but we don't know what's needed without the study being done. And in a declining revenue environment, knowing what our greatest needs for maintenance and making sure that we salvage the buildings that we have and maintain those is of utmost importance, so we don't have to build new buildings. And that's what these level 1 and level 2 studies provide, is that information, so that we have a good data point to go from, so we know that the roof on X building, it might be about to fail, and this is what it's going to take to engineer it and rebuild that roof. Because when you talk about a commercial type building, it's different than throwing shingles on your house or your barn. We're talking about major projects these things incorporate. There's electrical, there's HVAC, there's all sorts of stuff that is incorporated into changing a roof, replacing a roof. There's major HVAC systems, $1 million, multi-million-dollar systems that run these large buildings. And that's what these level 1 and level 2 studies evaluate. And these are the kind of things that are going to happen through these. And if we don't have this information available, we could potentially end up in a position where we're behind the 8 ball. So I certainly am against this amendment, as I think it is absolutely important to make sure we do major maintenance and keep our buildings in good shape. Just because this is in a capital construction bill doesn't mean we're building new buildings when we study these things. It means we are looking into all factors and all facets. Sitting on the SBC, I'm not aware of any other than the community colleges. There's no buildings being proposed. Everything being proposed is major maintenance type projects, but they are major. You see a couple down the list here, as we have an HVAC system at the Women's Center in Lusk. And that's what, and that a project like that started as a level 1 and 2 study to know what was needed and what the cost would be, and then we would proceed with it. So I am absolutely against this amendment, as I think this is spending dollars wisely to save dollars in the long run.
Mr. Co-Chair.
Well, Mr. Co-Chair, and I appreciate those comments. And if that's really what we did, then I would buy into it. But you look at some of the subtitles, it talks about Office of State Parks and Cultural Resources, museum expansion. We're not talking about a roof or doing something with HVAC. You get into the other ones we talk about, Department of Corrections, Wyoming Women's Center main building expansion and maintenance addition, maintenance storage facility. I mean, if we wanted to set aside this for level 1, level 2 being looking at major maintenance, I'm all in. I think that's a different deal. And maybe I'm misreading what little subtitle 1 talks about here, but that's the way I read it. And I'd be glad to look at this, looking at the different things we can do for major maintenance, if that's what it really did.
Representative Summers.
Mr. Chairman, thank you. And, as I look on page 5 on 6, Department of Corrections is security electronics integration. I can certainly understand if there's individual items within this 500,000 or that we don't really want to look at. I'm supportive of that debate, but I look at number 6, security electronics integration. Is that necessary, not necessary? I guess that's the level 2 study, but but that's really not building a building. That's trying to get better electronics for security for prisons. So that one, you know, if I had to save anything in there, not knowing a lot about all of these, that's one I would definitely want to save, because that could affect how our, you know, affect our the ability for our prisons to hold people. So I'm not supportive of this amendment in its current form. Let's put it that way.
Further discussion? Do we have an amendment to the amendment to make this a little more palatable? Like 400,000, 20% cut?
Well, Mr. Co-Chair, it's Senator Hicks' amendment, but I think Representative Walters makes a good point. I think Representative Summers makes a good point. It ties in what I'm saying. If you could reduce the amount and take out those that are truly expansions and not dealing with major maintenance and looking at the different ones, I think that would be appropriate. But I'd let Senator Hicks, you know, it's his amendment, see what he thinks about it rather than me jumping in. But I think there's room to get what we all want out of this.
So, Mr. Co-Chair,
Yes.
the trouble with just taking an arbitrary whack at the budget is we've all seen what these estimated studies are going to cost. You know, the idea was to aggregate these. I don't have that information in front of me. So maybe the best way to do it is to maybe look at what Representative Summers said and strike those footnotes out of there as eligible projects, rather than take an arbitrary whack at the budget. So I don't know what the appropriate way to, you know, what would best facilitate. There's things in there. When I look at footnote number 1, master plan studies for Cheyenne area state buildings, level 1, level 2 studies. And we just spent over $330 million on the Capitol restoration and the Hirschler building. You know, to look at now the whole Capitol Square project, spend money on a study to do that when we're looking at $1.5 billion this session, $2 billion next session. I just think that the optics on that right now for the public, especially in other areas outside of Cheyenne, I think it looks really bad that we're going to fund studies to figure out how we're going to build out the master plan study for the Cheyenne area. And
Yeah,
so,
and I understand that that comment, Senator, but I think the reason that that's there is because folks, there used to be a master plan, but it's been disregarded. And as a result of that, in that disregard, now we have a couple new buildings owned by the state of Wyoming in Cheyenne that didn't really go through the legislative process. They just did it. And so part of this is an attempt to get control of that for those new buildings. Number 2, part of it is to evaluate who's in what office around the state within Cheyenne to maximize federal dollar returns and then establish a policy in it, because frankly, with federal dollars, they should be in the highest rent areas in order to maximize the return and pay for those offices. And we're not doing that. They get to kind of pick their offices. And so I think that's the reason this is in here. I'm not saying that it may be that now we shouldn't do that. We should postpone it. I don't know if there are going to be any new buildings for a while, but there was a purpose behind that particular item that had more to do with cost savings than cost expansions.
well, and Mr. Co-Chair, and I think every one of these had a rationale as to why they were in there. The real question comes back is the rationale pertinent in light of the conditions that we have today versus when we were looking at this 4 months ago? The world has changed. And so there's a few of these again, you know, expansion of the State Museum. I just don't think that we need to be looking at expansions of the State Museum at this point in time. But anyway, Mr. Chairman.
And by the way, the expansion of the State Museum will be with museum dollars. It won't be with general fund dollars. Representative Summers.
Mr. Chairman, even though I just said maybe we need to go through the bullet points, just to just to maybe facilitate more discussion, I'll just make an amendment to the amendment that we reduce the amount to 300,000. We leave 300,000 in there. In other words, we reduce 200,000, leave 300,000. Obviously, then the SBC is going to prioritize what level 1, level 2 studies they do. They'll take a little harder look at what's really needed. And maybe we go that route. So that would be my motion.
Is there a second? Seconded by Senator Drew. Discussion on the amendment to the amendment. Seeing none, all those in favor say aye.
Aye.
Or raise their hand, actually. 1, 2, 3, 4, 5, 6, 7, 8. That motion carries. Back on the motion. Any further discussion? Seeing none, all those raise their hand in favor of the motion as amended. 1, 2, 3, 4, 5, 6, 7. That motion carries. Okay, next motion, Senator Hicks.
Mr. Chairman,
Mr. Chairman,
Senator Kinski.
I just want to observe that was a $500,000 discussion. We only have 65 million to go.
Well, it's a $200,000 discussion. Go ahead, Senator Hicks.
Mr. Chairman, line 13, 14, and 15.
Time out a second. Don had a comment, Mr. Co-Chair.
Oh, I'm sorry, Don.
Sorry, Mr. Chairman. Representative or a representative from the State Construction Department, Mel Muldrow, has asked to be included in this. I know this is unusual because you're working the bill. Would you like us to include him in the meeting or not?
Oh, he can listen, sure. And if he has comments, Mel, if you can hear me, if you have comments or if we're espousing misinformation, or if anyone wants to ask Mel a question, please do, so we can make sure we're fully educated on what we're doing. All right. So 13, 14, and 15, Senator Hicks.
Yeah, Mr. Chairman, would be to delete those, all three of those appropriations, and replace that with $3 million in special revenue designated for Hot Springs State Park concessions resolution.
We have a second.
Second.
Second by Senator Kinski. Discussion.
Again, Mr. Chairman, and my understanding is there's actually a bill working through TRW committee right now, brought by state parks to look at changing how they can spend their special revenues to some of their normal expenses. I think it would be incumbent upon us as to save that money for right now until that process works through in the next session, and see what state parks is interested in doing with all those special revenues. But anyway, I just don't think that in the next 9 months that it's prudent to spend those monies right now, knowing that all the issues that we have coming. So,
Representative Summers.
Mr. Chairman, I just wanted to get the numbers clear. So is that 12, 13, 14, and 15? Because I thought at one point I heard 16. So I'm just, because I think that's a whole nother issue, 16. But, and then just a comment, Mr. Chairman, for example, on the Quebec 1 facility, and I might, I don't know if I'll ask Mel or not, but if that's, we just got that going. If they need 25,000 and it's their special revenue, I don't see a reason not to fund that. And so, and likewise, the territorial prison, if that territorial prison needs some fix up, and we want to boost tourism, I'm not sure that's a bad thing.
Representative Larson.
Thanks, Mr. Chairman. And to Representative Summers' point, I think that money for the Quebec facility was for signage, so somebody could see where to turn. I think that was the instruction for what that was for, and with I'm supportive of what Senator Hicks is doing here, but I would hope that maybe you'd reconsider that Quebec one, because I think they need to know where to get off the interstate.
Representative Walters.
I'm on and against the amendment. These are revenues that are generated by the department for the purpose of maintaining these facilities and improving these facilities. We're trying to drive tourism to the tourists to the state, increase revenue to the state through sales tax. We want to have the state look like an A+ state that we are, and allowing them to spend their own dollars to maintain and improve these facilities makes sense. This is spending authority only. And then I would point out that on page 5, starting on line 10, there is $3 million set aside for remedies in Hot Springs State Park. So the desire of the good bringer of this amendment is already taken care of on page 5, I believe. And this is language that came out of this committee's original discussion of capital construction in December or January as we were doing the budget markup. And so I thought we had came to a good agreement with our Senate counterparts as to how to address the Hot Springs State Park issue and allow state parks to spend their own money, as I said, to improve and make an A+ visitor experience at these facilities. So on and against the amendment, and would hope that others will see what I'm discussing.
Representative Schwartz.
Thank you, Mr. Chair. I just want to echo Representative Walters. This is about tourism, and we need to promote tourism as much as we can, because we know extraction is not going to get us there. So on and against the amendment.
Mr. Co-Chair.
Yeah, just a couple of things, Mr. Co-Chair. First of all, I'm not sure, maybe I misunderstood the proposed amendment, but I believe that the $3 million for Thermop stays in there. I don't think we're taking that out. Correct. I could be wrong on that. And then the other thing, Mr. Co-Chair, is, and maybe I'm wrong on this too, but as I understand it, there's still $3 million that the state parks will have in special revenues, and there's a mechanism set up that they can utilize that for their existing state parks to do things that they feel necessary in terms of helping out. I know they've done a great job at right there at the canyon, where the tunnels are, utilizing these special revenue funds. So I didn't think we were eliminating them. I think we're just saying that go back into the way you spend your money, the way the current statutes are, and you could utilize these $3 million for other things. And that was my understanding. Now, maybe I'm wrong on that.
Don, do you have some insight on that? My recollection is we've directed them for all capital construction projects to come through us of certain size, but I just don't remember.
Technically, and if there is not a special session, the governor, and I think Kevin will concur with this, could be 11, all of the amounts in lines 11 through 15 without any action by the legislature. He has access to special revenue through the B11 process. I think he's even discussed using it for this one, as well as lines 9 and 10, federal funds for National Guard. Technically, those do not require legislative authority unless you change the underlying B11 statute.
Okay. Further discussion on the motion. Senator Hicks.
Mr. Chairman, and had discussion with Chairman at TRW. One of the exercises that they're going through right now is looking at all these state facilities and state parks and making an analysis as to which ones are actually making money and which ones actually cost money over and over and over again, and then maybe shuttering some of those facilities up. It makes no sense to me until that analysis is done by TRW to come back and spend money on the territorial prison, $210,000, and then find out next year we're going to shut it down. And so I just think we need to allow TRW to do their work with state parks and go through that process and then come back and make a recommendation. 9 months isn't going to kill the tourist industry between now and then. And the simple fact is, this late in the year, most of these projects are probably not going to get done this season anyway. Number one, unless the governor decides to go ahead and BLM those funds right now. We're in the middle of July, guys. These are construction projects. The likelihood that they're going to be done before 1st October is remote at the very least. So I just think we would be better off to let TRW and state parks work through that process and then come back and make better decisions in December.
Representative Walters.
Thank you, Mr. Chairman. Reminder to the committee that this is spending authority up to these amounts. This isn't guaranteeing that they will spend all of these amounts. At some of these facilities, there are things that I think can be done in this construction season very easily. And maybe at the territorial prison, they don't spend all 210,000, but maybe they have a small project that is very important that needs to happen this year. I don't know what all their projects are. Maybe at the Quebec facility, as we were discussing earlier, it's some signage, something that can take a matter of a couple of weeks and they have better signage up. It's spending authority up to these amounts is what the agency described to us when we were going through the hearings several months ago. And so again, it's allowing them to spend their own funds. So I don't see why we're sitting here worrying about that. So I would encourage a no vote on this amendment.
Okay, further discussion. Seeing none, all those in favor of the amendment, raise their hand. That amendment fails. Senator Hicks. Or any other person for amendment. Representative Sommers.
Mr. Chairman, thank you. I believe, and I'll ask Dawn to clarify this, but I believe line 16, the WCC nursing facility, I believe that's the one we got the email on to eliminate it from the bill. So is that correct, Dawn?
Mr. Chairman, that's correct.
So my motion would be to eliminate line 16.
We have a second.
Second.
Who's second by Senator Kinski. Discussion on the motion. Seeing none, all those in favor say aye. Raise their hand. That motion passes. Any additional motions?
Mr. Chairman, last time Senator Hicks was trying to make a motion, but he was muted. We just need to make sure he unmutes.
Okay.
Mr. Chairman?
Go ahead, Mr. Co-Chair.
Yeah, if Mel's still out there, I have a question on the 921, the replacement, the level of importance of that. I can't remember. Maybe someone else on the committee can help me. The HVAC, I think it's at the Wyoming Women's Correction Facility. Can anyone help me out that's the DOC budget?
Mr. Chairman, this is Mel, if I could speak.
Please go ahead.
Mr. Chairman, Mel Mulder, Interim Director of State Construction. The HVAC replacement for Department of Corrections, that's at the Women's Center. And they've got a series of units, and in these particular pods that these HVAC units are in, those systems are in dire need of replacement. Really, they've been in the queue for a while, and DOC really has them at the top of their list for project work this year. As you notice in this list that was on the governor's list, it's the only DOC project that we showed out of about 5 or 6 that are in the queue in this next non-budget year session. So it's a priority for DOC, and I think it's important to their major maintenance program too to get it done.
Okay, any further discussion?
Mr. Chairman, are you asking for discussion on the women or any other aspect of this?
No, just
section 27?
Any other motion?
Well, I've got a question on lines 18 and 20. We went over those, but we've got, as they said in Cool Hand Luke, a failure to communicate, and I'm hoping that Representative Walters can help us. It's not that long ago, I think a week ago, that these went before I think the Building Commission, And at that time, they, the way it's been represented to us, and Representative Kinner can help me, they put it down for $4 million on the construction tech center. Before anybody gets excited, I'm not asking for $4 million. We're just trying to figure out what happened. We're under the assumption that a recommendation was made by the State Building Commission, and that we're assuming the governor's office said, no, don't put a dime in there. Let them raise money locally, put it down for 10 million private resources. And we're just trying to figure out what's going on. And if anybody knows, we'd appreciate it. Some illumination.
Erica, do you have the answer to that?
Mr. Chairman, I don't at this time. Is that something that we could get back to you on?
Representative Walters, what do you recall, Mr. Chairman?
Thank you, Mr. Chairman. This wasn't discussed in this dollar value at the SBC meeting last week. There was a different dollar value in place. Reading back through the bill from last session that ultimately was unsuccessful, I think the $10 million is a carryover number because it was proposed in that bill to do a $5 million from the state, $5 million from the college itself, however they raise it private. And so that $10 million at some point has been rolled over to all, total 10 million rolled over to an all private revenue source. And I don't know where that came from. My understanding of the desires of the college now is it's about an $8 million project total, of which they feel comfortable raising half of and would be looking for a alternative source to raise the other half of that $8 million. And ideally, I think they'd like to see a little help from the state. But that would also be part of a larger capital construction bill that I think we would look at in the 2021 session, as opposed to in a special session capital construction bill.
I agree. And again, I want to emphasize, Mr. Chairman, we're not looking for $4 million. We're just trying to figure out how this 10 million got there, because and I'll let Representative Kinner weigh in. They're concerned that it looks like back home that they're trying to build a $10 million facility just after they got done wiping out the sports programs and laying people off. So their request is that we actually pull that 10 million off. They're afraid it will just cause confusion back home. I personally think it's not a bad marker since it says other funds, but their concern is that it should be pulled off. Representative Kinner, you want to weigh in a little bit here?
Well, Mr. Chairman. Okay, I'm wondering if Mel could shed any light on this for us.
Someone's got their Zoom on.
Mr. Chairman?
I think it's you, Mel.
Yes, sir. Mr. Chairman, if I could?
Go ahead.
A little clarification. I think there are two things here. You're right. In the previous, in the document that you're reviewing today, it shows 10 million. What was discussed at the last SBC 2 weeks ago was specifically 8,960,000 is what was presented to the SBC for approval. At that meeting, it breaks out to, like he said, 4,960,000 of general fund and 4 million of other funds. And the reason that breaks out that way is when we add the contingency allowance and admin fees, it bumps up the state side a little bit. Inherently, as if you remember within the statute, it says that the state can add administrative and contingency fees to it. Normally, we don't get them, but we put them into the
Mr.
project.
Chairman?
Yeah, go ahead.
Mr. Chairman, I'm sorry, Mel. I don't want to belabor it, Mel. You don't need to give us all that detail. It sounds like what Representative Walters said is what they looked at last week is moving forward to a different bill, not this bill. That 10 million is here and there. So with that, I'd move that we strike the 10 million.
There's a motion to strike line 18. and seconded by Representative Kinner. All those, any further comments? Seeing none, all those in support, raise their hand. That motion carries. Okay,
And Mr. Chairman, if I may, and again, Representative Kinner's had a few more conversations than I had. I think the academic center level 2, I think they've gone ahead and done that out of local resource. I don't think they need that money. Is that right, Mark?
Mr. Chairman?
go ahead.
Senator, I'm not quite sure. That is for the academic center in Gillette. So that's why I'm not that familiar with it. My suggestion would be to leave it in there.
So Mel, I think you may
Joe,
have both your volume on and your Zoom, I'm guessing.
I think it's
Somebody
Senator
does.
Kinski.
Oh, it's
Senator
Kinski?
Kinski.
Okay. There we go. Any motions? Do we have a motion on 22? I think that was taken out in the House side, my recollection as during the session. No? Maybe I made the motion. Representative Larson.
I think Mel could clarify that, but I think the intent was to start putting some money away for when those facilities have to come down.
Any further discussion?
Tom might be able to clarify that as well.
Well, Mr. Co-Chair, for discussion, I'll move, maybe now's not the time to spend money to tear things down. They're going to sit there. I'll move that we delete that and then maybe we can get a better discussion on it.
Second.
Moved and seconded. Discussion. Representative Walters.
Thank you, Mr. Chairman. On and against the amendment. This is to get rid of some of these Department of Health buildings as we are improving the Life Resource Center as well as the state hospital. Leaving those buildings standing generates major maintenance dollars that go to those buildings and things like that. And so I'd call it short-term pain for long-term gain in getting those buildings down and out of the way. And it'll be needed as these projects come to completion. This is a known cost. We've known this cost was coming when we started these projects a couple years ago, and due to some asbestos overruns and things like that, our budgets on these two projects, one of them in particular, has really struggled with that budget because we've discovered things after the fact, and that's the trouble of renovating old properties, is all the things you find behind the walls and under the ground. But anyhow, that's where we are today. So knowing these buildings needed to come down as part of the completion of these projects was all a known factor up front. And so this is the dollars to finish up those projects.
Okay, any further discussion?
Yeah, Mr. Chairman, I understand Representative Walters now. He seconds my motion, then he kills the idea. If it's okay with him, I'll just withdraw the motion and save having to get defeated again.
Okay, the motion's withdrawn. Any other motions? Okay, let's go to page 5. Any amendments to page 5? Page 6. Amendments to page 6. Page 7. Any amendments to page 7? Page 8. Any amendments to page 8? Page 9.
Mr. Chairman.
Senator Kinski.
Yeah, starting at the bottom of page 8, line 20, through the appointment of people and design of interpretive exhibits, and through page 10, $4.25 million, down through line 5 of page 11, I'd move this to strike.
Is there a second?
I'll second.
Seconded by the co-chair. Discussion.
Mr. Chairman, I just feel $4.25 million out of the strategic reserve for interpretive signs, interpretive exhibits, design, construction, wayfinding signage. There's some merit in it, but not now. Not now, not when we're going what we're going through, when what we've seen. I think there's plenty of pain. I just, at a time when we're laying people off, I think it's poor timing. I think we just got to let it set, revisit it later. And $4.25 million is a good chunk of change.
Further discussion.
Co-chair, Mr. Co-chair, a question of Don. In the whole capital renovation, and I know we put some other money in there last, I think a year and a half ago, and there's no money, it's all been reverted, there's nothing left. Is my recollection correct?
Mr. Chairman, Mr. Co-Chairman, I believe there are still expending the last $2.93 million on a variety of activities. I just checked the balance yesterday and there appears to be some outstanding bills. I don't think there's any additional funds to address any of the items articulated on page 9, however.
So any further discussion? So, yeah, I'll speak. I'm opposed to the motion for several different reasons. Number one, this is the state capital. We did spend over $110 million turning this into the jewel of the state of Wyoming and the people's house. And right now we don't have staff to have people know where they're going when they walk into it. There's no accommodation for school kids and their bus loads when they get there. No one unless someone steps out of their office who's going to tell the story of that capital. Twice we have gone out and rebid the cost of the wayfinding centers and the interpretive center. And it's already gone up about 20% from the original bid back 3 or 4 years ago. And so by delaying this again, basically we're going to postpone it to pay $5.5 or $6 million for 3 or 4 years from now. If there's an issue of the source of the money, then I think that the SIPA dollars would be a useful pot of money to take it from. But this, once again, this is business for the state of Wyoming. It's finishing a project that needs to be finished completely. I believe there's also some components in here for furnishings that go into state capitol. As you know, it's not fully furnished at the current time. The hallways are furnished with the proper furniture. There are just different components of this that are just, I think, essential to complete a project that has been, it's basically the first door, and it's the entry to everyone who comes into our state and for every school kid that walks into that building. And it's going to be money well spent over time. And the idea that we're cutting just because reduction in budgets, as you all know, the state of Wyoming represents about 20% of all the construction around the state on an annual basis. And if we decide to shut down more construction and more jobs, then we are going to facilitate losing more people out of the state instead of just walking around and cutting every penny that we possibly can. In fact, we're no different than the federal government and using PPP dollars to not shut down everything in the state. We need to keep jobs out there, but particularly on this particular project, we just need to finish it. So on and against the motion.
Mr. Chairman?
Go ahead.
Yeah, I thought furniture was being purchased out of the remaining 2.9 million that Don talked about that hadn't been expended yet. Can we confirm that? If so, I might amend the motion to say that accepting furniture, so LSO has a desk and a chair.
So my understanding, and Mel, you might know the answer to this, that we had issues over what furniture to order and the quality of the furnishings that were being ordered. And basically we put that all on the back burner about 2 or 3 months ago. And then the responsibility of it kind of transferred from the standing committee that was doing it. So I'm not sure where that's at, so.
Mr. Chairman, you're correct, if I could speak.
Please.
You're correct. The remaining funds that Don is talking about left in there is really the remaining funds to do the completion of the furniture, to your point, for the hallways, corridors, LSO offices, and different offices that are still without furniture in the Capitol. And we're still spending the last of the money on some last finishing touches around the Capitol also.
So was that a yes? Was that a yes that the monies are included in the revert, the money that's still there? Okay, thank you.
Representative Summers.
Mr. Chairman, thank you. You know, one piece of this that I really do think is really important, and that's the wayfinding and the ability for the public to be able to find stuff more. I guess what I'm asking the Senate is there any middle ground here for you guys on this project at all?
Mr. Chairman.
Go ahead, please.
I don't know that I have any votes on the Senate side. It just hurts. It hurts me to see that, you know, somehow everybody else gets slashed, but when it comes to something that's really important to us as a legislature, we've got all kinds of reasons why it's important. And Co-Chairman Nicholas, I appreciate your passion for your district and for the Capitol. I admire it and I applaud it. It's just, I'm not going to go back to Johnson County and to the cattlemen and the wool growers and tell them, well, the state capitol is the jewel of the state. You need to understand. We just needed to spend this $4.25 million. Couldn't help it, or else people wouldn't know how to find their way around the Capitol. Not when we're laying people off, Mr. Co-Chair.
Senator Hicks.
Yeah, Mr. Chairman, and I would share Senator Kinski's sentiments, but I'm not too worried about the Capitol filling up with school kids. I'm more worried about trying to figure out how to buy buses and pay bus drivers to get them there at this point, looking at the $400 million this year and the $1 billion 2 years from now. I think maybe we need to worry about getting them there before we worry about educating them on giving them a tour of the Capitol.
Okay, further discussion on the motion. Seeing none, all those in favor of the motion, raise your hand. 1, 2, 3, 4. That motion fails. Any additional motions on page 8 through 10?
Mr. Chairman?
Go ahead.
I had 5 no's. Did you announce the yeses, call for the yeses?
That's still a failing.
All right.
Any other motions?
Mr. Chairman, and you know what Representative Summers talked about, I want to pass a Capcom bill, and I don't want to have this be the thing that defeats it. I don't know what a compromise might be. I'm trying, you know, it's really hard for me when you're going to have a legislative appointed committee and we're going to sit down and talk about it, and you already got the money out there. If I had more specifics exactly what it was for and what we were going to do with it, and I'm sure we could do it for a lot less money and do part of it maybe, I'd be willing to look at that, but I don't know what that is. I mean, I really don't have any idea, and this is just typically the way we do it. We're going to get a bunch of guys and gals together and we're going to spend $5 million and you know, we just got to have a little more thought process to it. And if you could help me, maybe we could delineate or actually know what it is that we're going to try to do and have actual numbers to it. There might be a way we could compromise. I'm not sure we could get the Senate to go along anyway, but I don't want to go back and not have a Capcom bill is what I'm saying, Mr. Co-Chair.
So, Mr. Co-Chair, Mel, do you happen to have the numbers? I know that Wendy circulated a breakdown of that 4.2 during the session. And I saw an updated version of it in an email to me about 2 or 3 weeks ago. But somewhere do we have just a rough general breakdown or outline of what that 4.2 is for? And if it's possible to split it up? Senator Kinski, go ahead.
Mr. Co-Chair. Yeah, with respect to the comments by Senator Bebout, I'm not going to vote this down today over this. I think that breakdown, we don't have to go through that today, but if we can have that, if we have a special session and if this goes out to the floor, it would be important to have that breakdown at that time. And I'd be happy to work with you and Representative Summers on finding a middle ground.
Yeah, and I've got it someplace in my emails that I can deliver out at the end of the meeting. And I'm sure Wendy or someone's paying attention and she can circulate that, Mel. And would you just double check on that for us?
Mr. Chairman, I surely can do that for you.
All right.
I'm looking for that email now, but I'll get with Wendy and we can get that to you pretty quick.
Okay, Senator Grew.
Thank you, Mr. Chairman. I too agree. And I think all of senators are expressing, we're talking about, this is about the will of our body about getting this through. I can tell you, I agree with my fellow senators that we would not get this off the floor at this price. I think that we should take a good hard look at the numbers. I don't know if anybody's talked about it. We've spent $300 million on the Capitol. Have we done any fundraising or any private fundraising to maybe do some of I think this last piece, especially the interpretive center and these wayfinding and some of these other things, might be ripe for a fundraising campaign by someone to try to help defray some of these costs. And I'd just like to see us explore those types of opportunities as well.
Well, Senator Grew, that's a good point. We had those discussions on occasion in capital oversight, and the part of the problem is that LSO and legislators who were serving on that committee they weren't in the business of going out and creating these foundations to go out and do it. And there are foundations. There's one at least that exists that in the past that has benefited for that, along with the governor's mansion and certain things for the First Lady. But there's no doubt that at some point the city of Cheyenne and the folks ought to take some ownership in the ongoing care and maintenance and be part of the game. So I think that's something that ought to happen in the future, and it's an important thing that for days to come. But that'll have to be addressed at some point. I do have a quick motion, committee, just on page 9, line 2 and 3. We have 3 members of that are from management council. I'd make an motion that 2 members from management council and 1 regular legislator, so that it's not all just management council. And you might guess who I kind of want to be on that committee, but do I have a second? Second by Representative Summers. So it's
question.
Yeah, question on the motion. All those raise their right hand. All those in favor? 1, 2, 3, 4, 5, 6, 7, 8, 9. That motion passes. Any other motions on page 9? Any motions on page 10? Any motions on page 11?
Mr. Chairman,
Go ahead, Senator Kinski.
I'd move to strike lines 20 and 21, acquisition of the maquettes of the statues displayed in the Capitol Rotunda. I think the noise reduction and getting the blinding light out of people that are testifying to JAC is justifiable. The maquettes can wait.
Is there a second? Second by Senator Hicks. So I'll speak against the motion. And the primary reason for speaking against the motion, Senator Hicks, Kinski, is that when we acquire these, they will be used and they'll be put up for auction and sale, so they'll pay for themselves. And then also raise money for what Senator Guru was talking about, is starting a fund to start taking care of the Capitol. So that's the intent of acquiring the maquettes.
Question.
Representative Walters.
Thank you, Mr. Chairman. I would add on to that and saying waiting isn't really an option. These are for sale now and they're going elsewhere in the future because the artist wants rid of them. And so we either jump on them now while the opportunity is available or they won't be available. And so I too speak against the motion.
Well, and just to follow up on that, this is a sale of both the existing maquettes, and the artist has agreed to only allow, because he owns the rights to them, I think up to 12 replicas. And so this acquires the original maquettes and the replicas that then can be used by the state of Wyoming to raise revenues or how it sees fit. So further discussion on the motion. All those in favor, raise their hand. That motion fails. See 4 counts. Any motions on page 12? Okay, do we have a general motion on on section 7? Senator Bebout.
Yeah, Mr. Chairman, I would move that we delete, starting on page 13, section 7, all the way through page 18, line 7.
Second, I'll second the motion. Discussion. Seeing none. All those in favor, raise their hand. That motion passes. Okay, any other motions on the go?
Mr. Chairman, I've got a motion.
Senator Bebout.
Going back to the amount of money, on page 10, just to try to, I don't know if this will work or not, and I'm lukewarm, but anyway, on page 10, line 9, delete 4.25 and insert 1 million. And that gets started and then we can, I really don't want to do any of it, but maybe that's a compromise. I'm not sure it'll even pass. But I would make that motion.
Is there a second? Seconded by Senator Kinski. Discussion. Representative Sommers.
Mr. Chairman, thank you. If we go to the middle, why don't we go to the middle? I would move to amend and go to half of 425, which would be 2125.
Is there a second on the to amend? Seconded by Representative Olson. Okay, discussion on the amendment to the amendment. Representative Olson.
Yeah, Mr. Chairman, thank you. Probably one of the reasons I became a lawyer is I'm not too good at math, but I do know how to divide a number in half. And I think the amendment's a lot closer to the middle ground. So I'm going to support the amendment. I want to see this whole bill go through. I think there's room to compromise here, possibly even some more, but I think that's going to come in some other areas. I imagine some discussion is going to resurface based on previous amendments. I think this is the middle ground.
Well, Mr. Co-Chair, if I'd have started here, then one of my good colleagues from the House would have split the difference between this and where we are.
True fact.
Okay. Further discussion. Question being called. All those in favor of the amendment to the amendment, raise their hand. 1, 2, 3, 4, 5, 6, 7. That motion passes. Now back on the motion on the amendment as amended to reduce it to 2.1 million. All those in favor, raise their hand. 1, 2, 3, 4, 5, 6, 7. That motion also passes. Any other amendments? Representative Larson.
Mr. Chairman, this goes back to the conversation we had yesterday on transferring a previous appropriation for renovation of a building for Department of Family Services on the campus of the Life Resource Center and changing that to the Emerson building. And I'm not sure where that would go in this bill. Dawn, if you could do that, but that would be changing, that would be reappropriating the funds that are left for the previous building that we were looking at, a 1.188, I believe, and designating that to the Emerson building.
Representative Larson, I think that the number is 1.8 or 1.88, 1.18.
1.88, that's right.
Yeah, that was my recollection.
Thank
I'll
you.
second.
Moved and seconded by Chairman Bebout. All those in favor, raise their hand. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And Don, is that going to be in this section or where are you going to put it?
Mr. Chairman, and I will defer to Anna, but I believe it would be a new section 7, so it will replace the rural hospitals. It'll still be just a line or two.
Okay, that's fine, Anna. So yeah. Okay, any other amendments? Seeing none, any further discussion on the bill as amended? All right, roll call, please.
Mr. Chairman, the motion is on 21 LSO 0020, working draft 0.3 as amended. Representative Kinner.
Aye.
Representative Larson.
Aye.
Representative Olson.
Aye.
Representative Schwartz.
Aye.
Representative Summers.
Aye.
Representative Walters.
Aye.
Senator Agar.
No.
Senator Garou.
Aye.
Senator Hicks.
No.
Senator Kinski.
Aye.
Co-Chairman Bebout.
Aye.
Chairman Nicholas.
Aye.
Mr. Chairman, the bill passes. I assume this will be with the same direction as the prior bill, House or Senate or mirror as determined by future rules.
Yep, that'd be great. Well, it's a miracle that the joint appropriations really passed a Capcom bill finally. Thank you, everybody. So, Don, next is we need to pull out our schedules and figure out dates. Is that correct?
Mr. Chairman, I think that would be worthwhile. The committee generally meets in the last week of October. The recalibration committee has already established a 2-day meeting toward the end of October. If you don't mind meeting over the top of the Judiciary Committee, you could meet on October 26th, 27th, or 28th, or you could meet the 22nd and 23rd, Thursday and Friday. The 22nd is probably the earliest we could publish Craig.
So, Representative Olson, you're on Judiciary, is that correct?
Popular contrary belief, I am not on the Judiciary Committee.
Well, you should get on it then. All right.
Was.
Yeah, you were. Anyone else? Is anyone on Judiciary?
No, you have no conflict for the members.
Okay.
Lobbyists might.
Well, I would just soon do it the following week. And because that's kind of where
What's the date under consideration, please? I'm sorry.
Go ahead, Don.
Mr. Chairman, it would be Monday, the 26th, Tuesday, the 27th, or Wednesday, the 28th of October. Probably at 2 of those 3 days.
All right, now that I'm on my October calendar, give me the dates again.
Yes, Mr. Chairman, Senator, 26th, 27th, and 28th. Probably 2 of those 3 days.
Mr. Co-Chair, what does everyone's calendar look like for the 22nd and 23rd? Does that create conflict for anybody? Larry's shaking his head. He can't make it.
They can't make it.
Mr. Chairman, I've got the 29th and the 30th Select Committee on School Finance Recalibration.
Yeah, we both.
I guess I could do I guess we could do 3 days of.
It would be
That
4
makes a
days.
hell of a week.
It would be 4 days that week, because it'd be 2 days for JAC, 2 days for recal.
Mr.
That's
Chair,
theirs was.
Yeah,
yeah.
I got to
but
practice law in there somewhere.
It would be my preference to have a day between JAC and recal rather
so-
than 4 straight days.
And I would agree with that.
Mr. Chairman,
Are we stuck with that week? I mean, it kind of wrecks what I got at my law practice, but.
Representative Summers.
Mr. Chairman, why, if it's virtual, it doesn't matter. The day break makes sense. If we happen to decide it's in person, which I don't know that that's going to happen, then it makes sense that it's all in a row so you don't sit there. But I assume it'll still be virtual. So, and I think Dawn said that at the very least, it has to be the 26th to get the Craig out. So Dawn, my question to you is, will you have it out by the 26th? Is that good, or do we have to go to the 27th to make sure of that?
Mr. Chairman, Representative, we can absolutely get it out on the 26th. If necessary, the earliest we could do it is the 22nd, the prior Thursday. And there's nothing to say we couldn't put out an October Craig. I could brief the chairman via email and you could meet in November if that's of interest. The challenge with November is you have the election and you already have 3 committees meeting on the 5th and 6th. You could meet, for example, the 9th and 10th of November, if that has any interest.
So, Mr. Chairman, I'd vote for the 26th and 27th with the break on the 28th, so we can get our minds ready for the next 2 days.
All right, let's do that.
Okay, yeah, I think that, Mr. Co-Chair, that works the best for me, 26th and 27th. And well, hopefully we can rearrange our calendars and make it work for everybody.
Yeah, and Mr. Co-Chair, I think if we just decide now it's going to be virtual, I think that'll help some people out with conflicting schedules. So if
I would
we,
say
Let's
that-
just, go ahead.
Well, I think tentatively, let's make it virtual. But if we have the opportunity to have it in person, then we'll discuss that between you and I, basically, when the time comes.
okay.
Okay. Any other? Don, go ahead.
Mr. Chairman, earlier in the day, I believe you referenced a letter and then maybe suggested a second letter. We have drafted those, but really we've been doing it during breaks, so it's really not ready for prime time. If we understand the direction, the first letter is to, generally speaking, in support of the governor's phased approach to budget reductions. And the second letter is a request for narratives and budget specifics on both the first set of 10% reductions as well as any subsequent reductions that the governor so desires. And I can work with the 2 chairs to finalize that letter if I have the expectations correct.
Yeah, I think that's correct. I might have a couple tweaks to that to add a little bit more fire to it, but that's generally, if I could just get the committee's seal of approval that the co-chairs and I will review and revise the letter and we'll get it out.
Yeah.
Okay, I got the thumbs up for everybody on that. And the next letter then, Don?
The second letter is to request explanation of the individual cuts. I think,
Yeah.
yeah.
And what we'd like to do is request it as soon as possible and ask for a timeline so that we know, because we'd like to see it in August, frankly. And I think he said it was going to be in August, but the sooner the better. Okay. And similarly, the co-chair and I will review that letter and we'll issue it if that's okay with the committee. Okay. Anything else, Don?
Mr. Chairman, I do not.
Representative Kinner.
Thank you, Mr. Chairman. There was some discussion earlier about getting together next week on the second Capcom bill, on the COVID bill. And is that still the current wisdom, or can that be pushed to the following week?
So that will be, we're going to have a working group who's going to work on that. And so that'll be myself, Representative Summers, and whoever's designated by Senator Bebout. And we'll come up with a working draft. And when we have one and we're satisfied with it, we'll probably set up a Zoom meeting to have and publish it. So we have some public discussion and ability to comment, and we'll vote on that at that time via virtual meeting. We don't know what that date is yet, Representative.
Okay. Okay.
Yeah, and Mr. Co-Chair, to that regard, is Anna still on? And
Yes.
Anna, I think the directions I would like you to proceed with, and if it's okay with the co-chair, is Section 7, add those amendments that I had prepared in there, add the language that I think Representative Summers working on relative to broadband, and then also get some language we can wordsmith things on the university and the community colleges for their enrollment being down, and figure out a way to see how we could pull that together. And what else am I leaving out, Mr. Co-Chair?
That's all I can think of off the top of my head, but if we get some more, and if anyone else, any of the members have particular issues that they would like inputted into this in terms of use of COVID dollars, then please just forward those on to Don or to myself and the co-chair, and then we'll incorporate those into the draft. Senator Kinski.
Thanks, Mr. Co-Chairman. So I like the idea of the community colleges could show damage from COVID every bit as much as a business that went to the business council and showed, here's what I did last year, here's what I'm doing this year. That seems pretty straightforward. I like that idea. That's a great idea. And this is not the time to discuss it, but as you guys work through this bill, I don't know whether I'm part of this working group or not, but I'm still a little bit unclear on why there's $75 million for rural hospitals with a definition that includes virtually every hospital in the state, and then some larger pot of money for all the rest of the hospitals. None of that seems to me as important as the larger of issue is, why should it be so difficult to make a case for any hospital to do almost anything and make a credible claim that they're expanding their capacity to deal with COVID or a future pandemic? And so if we can't do that, then I don't know what good this money is really going to do for a future health-related crisis. So there was some discussion earlier. It was about what are other states doing? I suspect us being so conservative, I just can't believe in these other states that they're really as hamstrung as we are by what really is a COVID-related expense for a medical facility. Can we get a little bit of research on that so that we're not getting wrapped around the axle on that question?
Well, and Mr.
And
Co-Chair,
who would research it, and where would they turn to?
well, Mr. Co-Chair, I'll take that on. And when if you recall the last meeting we had, and I visited with Representative Summers about this and others of the committee, and we started out trying to figure out what to do with, because the premise of what we did in the 1001 during the special session. I have no objection to expanding it to $250,000 and saying some broad way we can look at doing it. I don't have no objection to that. I think whatever we need to do, it needs to be the best thing we can come up with. And so that's why I had 75 million. I thought that would be specific to some construction that possibly would be different than going all the other hospitals. However, I think every hospital should have an opportunity to participate. So we can work on that, Senator Kinski. And I think there's language out there that fits your concerns and fits what Representative Summers wants to do, what I'd like to do, what this committee might want to do as we move forward. So we'll come with something I think will be a good compromise.
And Mr. Co-Chair, if I may, creative grant making, I did it for 10 years at the city. But what I heard you say about Riverton, I mean, if you're life-flighting all those people out, clearly you don't have enough capacity to deal with a COVID-related surge. And Representative Summers, if Utah locks you out and Jackson doesn't, and you're looking to Rock Springs Hospital, clearly you don't have enough capacity for a pandemic surge. To me, those things seem plausible enough to justify all manner of expansion of the facility you got using COVID dollars. But is there any way that Anna can, or even it might be something that's, maybe it's not an Anna Mumford question, maybe it's a Senator Bebout talking to Senator Barrasso type question to see what's really the inside thinking in DC. It's hard for me to imagine they're going to take this money back if we put it into a medical facility with some sort of colorable claim. Am I out to lunch, or are the people that worry too much actually right?
Well, I don't think any of us know the answer to that. But we do know it has to be expended by December 31st. And most of the language we have, feedback we have is that that's a drop dead date. At least, and that's what McConnell said last week. And so until we see otherwise, I think we have to presume that. So any type of construction that you're talking about that can be tied to COVID as a direct response to COVID, I think if people come up with plans and can demonstrate that they can expend it by the end of the year, and in the bill, we'll try to recapture that. So if it's not expended, they'll have to pay us back what they haven't spent. So we can put it someplace that does qualify. That's what our main concern is. And so I guess the important part is to think that, the special session will likely be right around August 20th. So all of those facilities out there that have this in mind and want to gear up and throw us some dollar figures when the amendments hit the floor on that special session, we'll be ready to deal with them.
Yeah, and I would just add to that I'm hoping that a lot of these rural hospitals are listening to what we're trying to accomplish, and that they would get up to speed and be able to work our way through this together.
Yeah,
and I think that's the way I would see it proceeding, and get that, and everybody's going to have. What's going to happen, in my opinion, is all of a sudden it's going to be September, October, and we're going to say what it shoulda, coulda, and that's what I don't want to do.
Okay. Appreciate the comments. Senator Representative Summers.
Mr. Chairman, thank you. And just to you and the co-chair, I have some kind of amendments that I've kind of shared with co-chair Bebout on that health facilities thing. I think most of them I copied Anna on. I just want to keep them open for discussion. So I'll just kind of keep filtering a few things to all three of you that as I see them, and then we can have a discussion. So you have some of that I sent that I copied John, Anna, maybe. Thanks.
Okay, Anna, as soon as you get some type of a rough draft that you can circulate, we'd appreciate it so that we can schedule have a kind of a general review and get this thing along, because we would like to kick this out as quickly as we can.
Okay, will do, Mr. Chairman.
Thank you. Okay, anything else, committee? Senator Bebout.
Yeah, yes, Mr. Co-Chair. We talked about EGI and the lack of good information to be able to make a decision. That's a thorn in all of our sides and very expensive. And have you given any thought, or do you want to think about how we might be able to get good data so we can make some decisions, or just leave it alone? And that is a decision, just leave it alone.
Yeah, Mr. Co-Chair, I've got ambivalent feelings about it there, but I really do want to get information back that has not been provided to us, even if we don't do anything, because we asked for information and it hasn't been provided to us. So, Don, what I'd like to do is, if you would just follow up kind of a list of what we requested and what we had not received yet, particularly on the claims basis. And I think we need to make the request to the right entities, because I've gotten several emails that represent that that's not proprietary and it's not confidential, and that there's ways for them to produce it to us, because it's something that is important to us. And if they don't like to do it, then I might want to bring statutory changes to force them to give it to us, just because it's data that will help us improve our healthcare costs and issues around the state of Wyoming. So you can circle back around with that and we can discuss that as well. Does that sound the right direction, Mr. Co-Chair?
That'll work.
Representative Summers.
Mr. Chairman, on that note, there was something brought up offhand during that whole discussion that I thought was reasonable to investigate. Maybe it's not reasonable, but there are, you know, those two outfits that manage healthcare for school districts. I'm not saying they're the ones we pick, but should we be looking at a different administrator for this thing? I mean, to be honest with you, is that something reasonable that we could actually investigate? Because I'm just not happy with where we're at right now.
Well, I think that's a good point. I don't know what the current contract is and what the length of that contract is or when it was last renewed. I think the other thing that what we could do is ask our Cigna to look at the other policies and mirror them, and or to such an extent so that they can offer, if they can offer comparable policies at the same price, because we really haven't done that. We haven't had that direct comparison. Everyone was kind of avoiding it. But when I looked at the data, it was pretty clear to me that we don't offer anything comparable. And so we can't really compare price points because they're not there. Representative Larson, I think you were next.
Thank you, Mr. Chairman. And on your conversation, Representative Summers, about information, you know, the information we do have really did come from that all payers claims database stuff that we got, and but it was incomplete. And we heard yesterday from, and we seen in our LSO document that we couldn't get the information from some of the providers. And I think that's batting the ball back and forth across the net yesterday. School districts saying, well, it's their fault, they're calling it proprietary, and then they're saying, no, the school districts have it, they can give it to you. But I think we need to have that information if we're going to make some reasonable decisions.
All right, Don, another charge. Okay. But yeah, there's definitely more information that we need to make for us to be fully educated on it. So, okay, other comments? Anything else?
And Mr. Chairman, before we adjourn, I just would like to have all the senators stay on and just go off the, if we can do that, Karen, I want to talk to them about a couple of things. Just the Senate, and not certainly, I just want to visit with them while I got them their undivided attention here for at least another 5 minutes.
All right, well, we'll make sure that we're not listening. Representative Schwartz.
There's nothing we're hiding.
Thank you, Mr. Chairman. Did you just say I wasn't going to listen? I don't know. It's going to be hard. No, I just on the subject of Cigna, we were mostly talking about policy changes. I'd love to get information on adding a stop loss so we're not totally self-funded. See what that looks like.
Yeah, I don't know why we can't take part of their policies and create a whole new offering that is outside of the current what we offer now, and just say, let's offer an alternative that mirrors everybody. And if we do so, you know, everyone talks about competition and that competition is good, but the bigger you are, the more influence you have on negotiations. And my guess is that if we had one bigger entity, it would have more ability to influence the prices in Fremont County and in Natrona County than having three companies. That's just my personal opinion. And then there's no secrets, and there's no, you know, because everyone, but we got to get more information to figure out if that's true. We just don't know. Go ahead.
If I may, Mr. Chair, also add looking into HSAs and wellness programs, because I think part of our problem, we don't educate the members of EGI how to manage their own health and their health care. And in my experience, that can be very beneficial.
Yeah, I mean, it's worth looking into. I know that the state has incorporated with those over and over again since I was first employed at the state back in 1985, 84, actually 83. And they come and go. And some people believe that they are very valuable. The ones that with the state of Wyoming, they got rid of them just because they didn't make any difference. They thought at the end of the day, after doing them, they thought they lost money on them. But
yeah, we should look into it. Though my experience is it requires a certain level of effort to educate the members. But once they embrace it, it can work.
I used to be able to take an hour and a half lunch.
Mr. Co-Chair.
I can go work out. It's part of my health.
Mr.
fitness.
Co-Chair.
Exactly.
Go ahead.
Well, there was, not to drag this out too long, we do have an HSA program, the wellness program. I was at the city and the HR manager came and said, I want to do a wellness program. And I said, God bless you. But here's what you're going to do. You're going to put a lot of effort into it, and the people who don't need it will sign up for it. And the ones that are responsible for 80% of your medical expense, smoking too much, drinking too much, weighing too much, spending too much time on the couch, they ain't signing up for the program. So there's several years ago, and LSO might be able to find it. It was some Fortune 500 companies started assessing a premium on the policy if you smoked, used tobacco, or you had a BMI over a certain level. And that was proven to be effective in terms of getting people to quit smoking and losing weight. And you got to hit them in the pocketbook is the way it turns out. But it was an interesting article. I didn't save those articles because I didn't have employees on healthcare plans anymore, but it's fascinating research.
Okay, Mr. Co-Chair. Do you have your hand up, Eli?
Nope.
Okay, any other comments? I think we've got that covered. Seeing none. All right, thank you, everybody. It was a long 2 days, but we got a lot done, and we're bigger and better people as a result of it. So thanks again for all your help.
See ya.
See ya. Thanks. John, any questions, give us a holler.
Will
Yeah,
do.
Senators,
All right.
stay on for just a
We'll
second.
adjourn.